All right, folks, it is officially time to begin what is going to be one of the most monumental events, I believe, in all of 2024, quite honestly, which is NVIDIA earnings. It is time. Get some drinks, get some food. We're going to be here for the next basically 3 hours. I think the earnings call will start at 5. So we'll be here from 5 to 6 Eastern Standard Time. We'll get the results in about 20 minutes. And it's just going to be insane. It is going to be absolutely insane. We've got a lot to talk about. I made some moves today in my own portfolio. I want to talk about those. I'll talk about general sentiment. We're going to talk about expectations going into NVIDIA earnings, a lot of numbers we have to go through, and then we'll have the numbers. Then we will have the numbers, and it will be time to figure out what the hell is going on. Thank you, everybody, for being here with me. Let's get into the market close. Brian Murphy, Billy Jack, Smoke Tuna, David. You guys said I was late. It's 3:46. I was like 20 seconds late. I'm here. Bay Ray, Digital Content, Brandon, Kevin Benjamins, Duvinsons, Eric Wood, Keon, Brian Murphy, Felicia, Ryan. June says she's so nervous. I'm nervous too, dude. But I did some things today to make me less nervous, which we're going to talk about in a little bit. Kelly, hello. Thank you for being here today. Big Billy, Sasky Rose, Brandon, Brian, Hellybird. All right. Let's get into it. So, first, what moves did I make today? Because I definitely made some moves because I'm starting to get concerned about the broader market. Now, before I get into some of the moves I made today, let's just look at NVIDIA right now. It is officially down. Palantir holding up actually very well, 22.76. NVIDIA is down 3% on the day, 673. Last time I talked to you guys, NVIDIA was about 689. So that was about 4 hours ago, 5 hours ago on the market open. NVIDIA now is officially down 9% on the past 5 days. 9% on the past 5 days. Let me show you this chart right here so you can see it. Down about 8% in the past 5 days. So it's down. I mean, remember that huge 11% implied volatility the market thought that was going to happen on earnings? In the past 5 days, that has happened. I mean, it's not 11%, it's 8.2%, but we have taken a bit of a tumble. And now the question is going to be, was that actually the dip? And this is where the opportunity is for people to start buying before a monster earnings crush? Or is this just the preface to a year to date that is now only up 40%? At one point was up 55% and is going to start to decline closer to 20%, which still, even 10% year to date, a month into 2024 is phenomenal for any stock, much less a company like NVIDIA that's in the trillions. Being up 40%, maybe that still is too much. So we're going to find out in about 10 minutes what happens and see what goes on. But that is where we're at right now with NVIDIA. Okay, what did I do? I am now basically 20% in cash. I've gone 20% in cash. And here are some of the moves I've made. Let me just go through them very quickly to show you guys. So I sold the remaining 75 contracts I had in my Roth. My Roth is now, we made about 5,000 on this trade on Robinhood. And I sold the remaining 75 $25 strike options. We sold the other 75 the other day for 60%, sold the remaining 75 at 49%. So in total, we made about 55% on these 150 options. The quick logic here is that I wanted to capture gains. I'm a little afraid that if the market tanks, Robinhood's tanking with it. Robinhood is not prone to, survive if the market tanks. Second of all, Bitcoin needs to moon for Robinhood to do well. Bitcoin might take a little bit of a breather. It's up from 39 to 52K. I think the long-term Bitcoin will be fine this year, but in the short next couple months might not be. And we'll see. If it is, then that's going to be fine. I kept my entire long position, which I'll show in a second, but the Roth position I got rid of. This was a 2025 expiration and it was a $25 strike, which I believe is very far out of the money for Robinhood. I know some people think this thing can go to $30. I think conservatively $20 by the end of the year, optimistically $20 by the end of the year is likely, but I mean, that's also, a bit of a stretch. So given it was far out of the money, 25 expiration, my main position is 2026. I sold all of these and captured my profits. And this is where we can see it right here. Robinhood $25 call, January 2025 expiration, order filled. Boom, we're good to go. The Roth is now 18,500 in cash. We basically added a year's worth of Roth to the Roth, or about 80% of a year's worth of contributions in like 3 weeks by doing these options. So that was the bit of a hack we did on the Roth. And that is now in cash and we're not touching it. Additionally, you guys know my mom gave me $5,000 to invest for her in the summer. I put those into 90 option contracts for Robinhood. We sold 38 of them in December. We sold the remaining 52 today. So her total gains went from 5,000 to 10,052. So she doubled her money on this, and she's now going to take this extra 5,000 and max out her Roth IRA for the first time at 53 years old, which is super cool. This post sparked a lot of controversy on Twitter, so I'll put it in the chat. You guys can read through the comments, but a lot of people had a lot of stuff to say. So it was an interesting post. Let's just say that. So her position is also now closed, and that is done. Additionally, I sold 20 TFC contracts. I had 70 TFC contracts. I closed 20 out of those TFC contracts at an average gain of about 20%. So I made about 1,200 on those, and I closed out some of my clean spark contracts as well. The idea here is that I'd rather be safe than sorry. I'd rather have a position that is, 20% cash for a major pullback that might happen. And I'm going to show you why I think there is a chance for a major pullback to happen versus a position that is hedging on one company to perform. And if they don't perform, I'm screwed. The actual position for Robinhood is intact. Those are the 360 spreads. You guys already know about the position. So that position is intact. I did sell 10 of those today. So it's 350 instead of 360 now. And that's up a good 70, 80%. We got those really cheap. So unless Robinhood goes back to $10, I mean, that position should be fine. That expires 2026. But 350 of those are intact and 50 TFC spreads are still intact. I just really, really, really did not want to have the entire portfolio collapse because of Nvidia. Now, here's the tweet I want to bring to everyone's attention. This is oddly peculiar. This is what happened in December 2021. Jeff Bezos, Elon Musk, and Mark Zuckerberg unloaded $43 billion of stock. That was all in December 2021. That was in the first 15 days of December 2021, which was more than double of the $20 billion they sold in all of 2020. Obviously, they didn't sell a lot in 2020 because the market was recovering from those COVID lows. And this is what the QQQ did from December 2021, 384. This is the NASDAQ 100. The big Magnificent Seven make up a majority of the QQQ and a majority of the S&P 500. It bottomed out to that 297 range from 384. Obviously, you can see a big decline. And then it took about 2 years to get back to all-time highs at 442. QQQ is down about 1% on the day. And the reason I want to bring this tweet to everybody's attention is because what is Zuckerberg and Bezos doing? Bezos is selling, he has sold $8 billion worth of Amazon stock in the past not 7 days, like the past 2 weeks. He has a plan to sell another, I think, $15 billion worth of stock. And Zucks has unloaded about $600 million worth of shares. Now, obviously, they're allowed to sell their positions, and it's not something to read that into. But at the end of the day, if these guys are selling, there's a reason Zucks is selling now, and he wasn't selling at 200. There's a reason Bezos is selling at 170, and he wasn't selling at 105. And so if that has any indication historically, we might see a little bit of a retracement. I think we all can argue that, or we all don't have to argue about the fact that the QQQ and S&P has run up pretty dramatically. QQQ 425 right now is at 439. S&P 500 before NVIDIA earnings, we got 7 minutes at 496. It topped at 503. NVIDIA now down 3% on the day. This is going to determine if the market has any fuel left and any momentum left to keep this going. Palantir also down about 3% on the day. Now, Palantir actually held up pretty well. I mean, I thought Palantir would get down to low 22s, and there was enough people ready to buy the dip. So, it's up a good 36% from earnings, which is pretty phenomenal. Some of those companies did not survive over the past 3 weeks. Palo Alto Networks, one of those companies, down 28% on the day. They have lost $33 billion in market cap after their earnings. And their earnings weren't horrible. Their guidance wasn't amazing, but their earnings were not horrible. It's just that the valuations became too much. And that's why I went into cash today. Because at this point, I think the valuations are getting not ridiculous, but on some stocks like Palo Alto Networks at 115 billion, they can get kind of ridiculous for the growth that they're putting up, which is only 19% year over year. Additionally, we got the Fed FOMC minutes today. And here's what we got from the Fed minutes, which also was not good news for the markets. It was kind of okay news for the banks, but it wasn't overall good news for the markets. In general, they believe that inflation could come back. So if you see these top 3 things that are highlighted in red, most officials noted risks of cutting too quickly. And some officials saw risk inflation progress could stall, which means those 2 core things are leading the Fed to feel, okay, we're probably not going to cut in March. I mean, that's likely just not going to happen, even though analysts thought it would be 77%. And now even the May cut is into question. And so when that ends up happening, you got the market that kind of tanked on this news as well. And it was already down, but there was a little bit more of a sell-off just because the market was like, all right, well, if we're not getting a May cut, then when are we getting the cut? Here is I didn't sell any Palantir. No, I didn't sell any Palantir. What I sold today is Robinhood and TFC. I sold Palantir options like a week ago. You guys saw that. We made about 60% on that. I actually bought Palantir yesterday. I didn't buy any Palantir today. But TFC, Robinhood, and CleanSpark, I trimmed those positions to be able to get some cash ready to go. Now, here is May. May is 29%. That is the average for a cut. March has gone down to basically nothing. There's 6% of people thinking we might get a cut. That was 77%. June is now at 53 plus 18. That's about 70%. And July is what the market really thinks is going to happen. That's about 90%. The market thinks that'll happen. If we have to wait till July, then there is a really good shot that in the meantime, until we get to July, things are just going to take a break, right? Which it kind of feels like it needs to take a break. And if that's the case, then yeah, maybe raising cash is not the best, is not the worst idea at all. Maybe it's actually a pretty decent idea to raise some cash. And at least that's how I felt today. Everything that I sold was for a profit, not for a loss. And some of these, really good percentage gains. And so at this point, I'd rather be safe than sorry and hold on to some cash. Now, NVIDIA expectations. Here's what the market is expecting in 5 minutes. In 5 minutes, we are going to know. The market is expecting on NVIDIA revenue of $20.5 billion, which is up 240% year over year. That's just going to be insane. And EPS of $4.64, which is up 427% year over year. That means their net income is going to be $10 billion, which is up 10x from their net income in Q4 of 2022. It's going to be insane. It's going to be insane. Earnings is at 420. Oh, earnings is at 420. Okay, cool. So we have 20 minutes to sit in nervous anxiety until that happens. That's great. So we get to wait. Oh boy. So we got 20 minutes. Of course, it's going to come out at 420. Of course, it would come out at 420. So let's see. We'll see what happens. But this is what we're looking at right now in NVIDIA. EPS of 427% and revenue of $20 billion. And ultimately, we're going to see if that ends up happening. So this is the poll I did. I'll do the poll in the YouTube chat as well. But the poll I did to Twitter, it's got 1,000 votes. Does NVIDIA moon, stay flat, or crash after earnings? I'll do the same poll right here in the chat. And this will be the final poll going into 20 minutes to see what ends up happening. Now, I don't have NVIDIA. Let me know in the chat if you own NVIDIA. I want to know what everyone thinks about NVIDIA, if they own it or not. But I don't have it. I have Palantir, and I think it will be affected by NVIDIA. Obviously not, maybe it's directly, but indirectly will definitely be affected. And so we'll see today after hours, where it goes. But it's not like NVIDIA per se is going to make or break me in terms of, my positions, because I don't have NVIDIA. But it will probably make or break parts of the market. And we're going to see. Joseph has 40 shares. Valerio has some NVIDIA. The fear is real right now. Yeah, but remember, the fear to me is, how people say, like, be greedy when people are fearful? The market's at an all-time high. I don't think that applies right now. I don't think you can say be greedy when people are fearful, when the market, like S&P, all-time high, QQQ. This is not 52-week high. This is not 1 week high. This is not 3-month high. This is in the history of the stock market. The S&P 500 has never been, and the QQQ, which is the majority of the tech companies we all analyze, has never been as high as it's ever been. Meta, all-time high, right? Like Amazon, basically $10 away from all-time high. Google, $15 away from all-time high. Now Tesla's in the gutter, but that's a whole different question. But you know what I'm saying? Like, this is not I don't know if this means we have to be greedy when people are fearful, because we've been greedy and we benefited a lot from the greed over the past couple of months. But maybe it's time for some real fear. Or maybe it's not. Maybe NVIDIA is going to crush, and this is a great market, which is why I didn't sell out of everything today. I still have, 80% of my money in the markets, but having 20% cash, I don't think is the worst thing in the world. Dave has NVIDIA at 127. Wow. Yeah. If you have your average, put your average below in the chat as well. Billy Bag Donuts, 24 shares at 220. 42 NVIDIA here. Brown Group Inc., $322 average on NVIDIA. Geo, 6% of my portfolio is NVIDIA. Cleon has 67 shares. Oh my. All right. Let's take a look at some of these other equities while we wait for NVIDIA. Then we'll watch some preview analysis of NVIDIA. SMCI is down 7% on the day. Robinhood down about 4%. TFC up a little bit. SoFi down about 4.7% of the day. So SoFi got hit as well. CrowdStrike down 10%. Zscaler down 14%. These are cybersecurity plays. Palo Alto Networks falling 28%. That is what's led to those companies falling. Even Bitcoin took a tumble today, down about 1%. It's down $1,000. Ethereum has stayed pretty strong, but Bitcoin has fallen off just a little bit. ARM at 123. Snowflake down 1.78%. Coinbase, this one is sad, dude. This one is sad. If you bought Coinbase after earnings and you got in at 165 to 193, which was the range it was at, you're down on those shares, which is really sad because they had a monster earnings. It's just the company is up almost 6x since the lows in February 2023. And this is why valuation matters. This is why valuation really does matter, and run-ups matter. It's very similar to NVIDIA. NVIDIA's up, 3x over the past year and a half. And so they could crush it just like Coinbase crushed it in their own respective rights. I know NVIDIA is a totally different animal, but the market could think, you know what? We've just given you too much. And so we deserve to take away from it. All right, the market is closed. Let me ring the bell. Wednesday, February 21st, 4 p.m. Let's see what happens. All right, while we're waiting for NVIDIA, we do have Rivian earnings. So let me pull that up. Here's Rivian. I want to pull up their numbers while we're waiting for NVIDIA. And also, are there any other companies that are doing earnings? Let me see. This week, today's Thursday, right? No, today's Wednesday. Oh, Etsy, Dutch Bros, and NVIDIA. And Rivian. Oh, and Lucid. Okay, so let me pull those up. Let's make a watch list. Here we go. So we've got, what do we got? We got today's 221. All right, so let's make a watch list. We are going to do, thank you everybody for being here. We're going to add to this watch list. We got obviously NVIDIA, then we got Rivian, then we have Etsy, then we have Lucid, and then what's the other one I said? What's the other one? The other one is Dutch Bros. I don't follow this one that much, but Dutch Bros is an interesting name, so we'll put Dutch Bros there. Okay, so this is what we're looking at. I'm going to pull up these numbers, and while I pull up those numbers, you guys can alert me if anything on the left-hand side of the screen goes crazy, and we'll see what happens. Does anyone have any of these stocks in the chat? Does anyone have any of these stocks? We got NVIDIA, Dutch Bros, Lucid, Etsy, Rivian, and Lucid. And I already said Lucid. Yeah, and Lucid. Let's see what we've got going on. All right, so Rivian is barely up. That's flat. Lucid is flat. NVIDIA is down slightly, and Dutch Bros is flat. So probably in like 3 minutes, we're going to get all these numbers. We're definitely not getting the numbers right at 4 o'clock because, just because the market closes at 4 o'clock, these companies don't think they have to report at 4 o'clock, which is okay. I get it, but it is a bit annoying. I'm going to load up CNBC as well to see if they say anything. We have Twitter loaded up to see if we get any results quickly. So I'll put in Rivian here. And we're waiting on numbers. We're still waiting on a bunch of these numbers. Bros in the chat, we got 1,000 shares of Rivian. Who bought NVIDIA before earnings? Who bought NVIDIA before earnings? I know there was a bunch of people on Twitter that were saying they were gambling on NVIDIA before earnings. Some people just bought. Dude, there are 16,000 options open for a $1,300 strike expiring on Friday. It's just insane. Let me show this real quick. It's just insane. So, you want to talk about gambling? People are gambling on NVIDIA, $1,300 call. Now, not all of these means they're bullish. A lot of these could be sold calls, but still, there is a lot of volume here. The volume is double the open interest on these NVIDIA calls, which is absolutely incredible. And I didn't even check the $800 strikes, but I would imagine that's a lot more as well. Okay, so here we go. We're going to keep this up. This is the earnings watch list today. Etsy's up 1%. Rivian's flat. Lucid is flat. And I'm trying to get the numbers as we look into this. CNBC, do they have any numbers? They do not have any numbers. They do not have any numbers yet. Okay. So we'll keep looking. Lucid, I think, Lucid, their CEO just got like a new compensation package, which is a bit insane. But he did indeed get that. So that's going to be interesting to see what happens. It'll be interesting to see how many cars they delivered because the Saudis keep backstopping them, but they don't deliver anything. And then I got Bros. We'll open up Bros here. And then Etsy. We'll open up Etsy here as well. I've always liked Etsy as a company. I've never invested in them, but I always liked the concept around them. They're kind of like a mini Shopify, but their platform is not as good as Shopify. But they've always been an interesting one to me. All right, so we're waiting. Buying any Bros dip? Or you guys have a decent amount of these shares. You have someone has 2,300 Lucid shares, 117 Tesla shares, average 68. Oh, that's an incredible average. Oh boy. All right. So let's see. Etsy is up 2.75%. Rivian is up. Rivian is basically flat. NVIDIA is flat. NVIDIA's numbers are in 15 minutes. The rest of these guys have not put out numbers yet. I'm scouring the web to see if I can get these numbers. Rivian is not up yet. Dutch Bros is not out yet. And Etsy is not. Now it's 4:05. We should probably get it. Within a couple minutes. Oh boy. SMCI is going to fall. Yeah, let's put SMCI on the watch list just for the hell of it. And we're going to put Palantir in the watch list as well, just to see how Palantir reacts as NVIDIA comes out. Oh boy, Nvidia's up 1% after hours. We can't read into it, but it's so scary. It's just like, what does that mean? Remember, the implied volatility is 11%. That's 200 billion up, 200 billion down. That's a Disney up or Disney down in terms of market cap, which is going to be just insane. Or it's going to be flat and it's going to be a nothing burger. But I think something's going to happen. I don't think a company like this with the amount of demand and options volatility they have is going to be flat. I think it's running one way or the other. Rivian's not out. Dutch Bros is not out. Etsy is not out. Oh no, Etsy's out. Etsy's out. Etsy fourth quarter. Oh boy. EPS is 62 cents. Estimated was 78 cents. They missed on EPS. Etsy missed on EPS. Revenue 842, estimated 827. They beat revenue by 20 million. They dropped EPS by 16 cents. The stock is down 3%. Stock is down 5%. We'll see how the street internalizes those numbers, but Etsy is down. Dutch Bros is down 1% already. I'm going to try to pull up their numbers, but Etsy is officially down. I mean, it's not the worst earnings. They missed on EPS. They beat on revenue. I'm trying to get the rest of their numbers, but that's not horrible. All right. So that's not the worst thing. Oh, no, now it's down. Now it's about down about 6%. Yeah, it seems like the street's about to get a hold of them. Dutch Bros is down 4%. All right. Dutch Bros maybe did not sell enough coffee. Dutch Bros, here we go. Fourth quarter revenue, 254 million, estimated 252. They beat revenue by 2 million. EPS, adjusted EPS, they beat by a decent amount. It looks like they beat it by almost 100%. They see total revenue for 2024, 1.19 billion. The street estimated 1.22 billion. So guidance, they came in smaller, and then adjusted EBITDA guidance, they came in smaller. Street wanted 190. They're seeing 185 to maybe 195. Right now, Dutch Bros is, it's basically flat. I mean, it's down 2%, but nothing crazy. Etsy also recovering, down 1.27. Those numbers aren't that bad for either. So, yeah, Dutch Bros and Etsy, kind of nothing burgers. That's nothing too crazy. Dutch Bros sounds like a weed dispensary place. It's coffee. Yeah, it's like energy drinks and coffee and caramel lattes and all that stuff. All right, so Etsy and Dutch Bros, I mean, not the best earnings, but definitely not the worst earnings. I don't think they deserve to be down 10 or 15%. Palo Alto, I also don't think deserved to be down 25%, but that one was much worse than these two. Nvidia's kind of green after hours, and Rivian is up 1%. Now, Rivian's the last one. Let's see if we can get Rivian numbers. And then we got Lucid. Rivian is not out yet. Lucid is, we got Lucid. Here we go. Quarter four revenue, 157 million versus 179. They missed by 29 million, or about 20 million. They lost $653 million this quarter. Lucid is kind of green. Lucid's up. Now, Lucid, I don't know how much lower it can go. I know it can keep going lower, but I mean, it is down like 90%. So I don't know how much lower it can go. But EPS, they here we go. They basically beat on EPS by 1 cent. And they missed on revenue. So this is what we got on Lucid. Down, so they instead of losing 30 cents a share, they lost 29 cents a share. And instead of losing 178 million, they lost 152 million. So revenue down 12%, EPS, they beat it by 4%. Lucas's Dutch Bros is adult milkshakes. Okay, the stock's not really tanking though. Lucid's down, but like, I mean the earnings are not the best, but the stock's not tanking. Lucid is, it's flat. Okay, now it's down. It's down like 0.27%. Now it's down 0.81%. I don't know how much lower Lucid can go, dude. I mean, Lucid is, I obviously can keep going lower and lower and lower to zero, but like at some point, this thing got cooked already. They did beat on EPS, not by a lot, but by a little. Etsy down 3%. Oh, Rivian's up 4.5%. All right, let's get Rivian's numbers. Rivian seems to be the only one that actually put up some decent numbers. Okay, so we have Lucid. We don't have Rivian yet. The Bloomberg terminal got Rivian's numbers. But it's not out yet. Oh, no, now Rivian's red. Oh, shit. Oh, I'm sorry. I didn't mean to correct. Oh, Rivian's 7% down. Holy moly. Oh, boy. Now it's down 6%. Now it's down 4%. You know, this entire earnings cycle, if you guys saw me go viral on Wall Street Bets, you guys, if you go to my Twitter, that's the pinned post. I'll just put in the chat. You can watch it at your own pleasure. This entire earnings season has been companies that go up immediately and then go down, or go down immediately and then go up. It's been kind of insane. I mean, it's been a bit ridiculous. And I went viral somehow on Wall Street Bets because PayPal was up 10%. And then within 20 seconds, I rang the cowbell and then PayPal went down 12%. But it's been an insane earnings, dude. The only companies that didn't do this are Meta and Amazon. They went to the moon after their earnings. They went straight to the moon. That's like the only companies that even Microsoft tanked a little bit before it went up. Rivian's now down 10%. Oh my goodness. I'm trying to get the numbers. Okay, here we go. We got it. And we got Nvidia in 9 minutes. Oh, Palantir. Yeah, Palantir also went to the moon as well. But in terms of big tech, Amazon and Meta were the only ones that went up. All right, so Rivian fourth quarter revenue, $1.32 billion versus $1.25. Wow, they beat by $700 million on revenue. Fourth quarter delivered, they missed by like 500 vehicles, 13,000 versus 14,000, 13,009 versus 14,003. Fourth quarter production, they made 17,000 vehicles. The estimated was 16,000. Adjusted EBITDA loss of $2.7 billion. The street wanted $2.5 billion, so they lost a little bit more money than they should have. And then full year production, that's the number that got them. The street wanted 80,000 vehicles. They said, hey guys, we're only going to make 57,000. Where's Tesla? Oh my God, where's Tesla? We got to add Tesla. I'm going to add Tesla to the list because is Tesla getting hit on this? Tesla's getting hit on this a little bit. They're down about 0.4%. Because if Rivian's only going to make 57,000, now I know Tesla's different, but the market's kind of piling up these EV companies together. Is that going to affect Tesla? So they're cutting 10% of their jobs. They're doing 10% layoffs right now. Bad guidance. Missed on production by 23,000. They lost 200 million more than they were supposed to lose. And then they they delivered 500 less cars than they were supposed to produce, but they did beat on revenue. That's so interesting. They beat on revenue, but everything else went to shit. Wow. I would imagine this makes Tesla stronger. Yeah, I mean, I would imagine, but there's an argument. Wow, they're down 13%. There is an argument that EV demand is starting to flatline a bit. I don't think that's the case for Tesla, but we didn't get guidance on volumes or on gross margins. So that's the one thing I think the street is a little bit scared about. Tesla did go to about 198 today, and then it came back down to 193. So it was up about 3%. Then it came back down as the market came back down. Etsy now down 5%. Rivian is down 12.5%. Nvidia still flat. Palantir down about 0.31%. Dutch Bros basically flat, down 0.44%, and SMCI is up almost 1% after hours. Probably not the biggest impact on Tesla, but it would be interesting to see in the earnings call if they talk about EV demand. Now, obviously, Tesla demand is way different from overall EV demand because Teslas are just so much better than regular EVs. But we'll see what implication that has over the next coming weeks when it comes to broader Teslas. All right, we got 7 minutes. Folks, until NVIDIA. Where's the poll at? Where's the poll in the chat? What are the results of the poll? What did you guys say? Let me pull up CNBC as well. Let's see if they're talking about these, and then I'll check these. Okay, we got some Rivian results right here. Let's see if I can pull this up. All right, here we go. Here's some Rivian coverage, and we got NVIDIA in 6 minutes.
Quarter. This is a miss in terms of the bottom line, a wider than expected loss of $1.36 a share. The street was expecting a loss of $1.32 a share. Revenue coming in slightly better than expected at $1.32 billion. The street expecting $1.26 billion. Some of the numbers within the numbers in the fourth quarter, adjusted net loss of $1.09 billion. That's an improvement year over year. They lost almost $1.5 billion in the fourth quarter of 22. The 23 net loss for the entire year, they lost almost $4 billion after losing $5.2 billion in 2022, and they end the year with $9.37 billion in terms of liquidity. Now for the guidance, and this is why the stock is under some pressure here. Rivian's 2024 production guidance, 57,000 vehicles. The street is expecting 66,000 vehicles to be delivered this year. Do the math there. They only produced a little over 57,000 in 2023. Now they're saying they expect to produce 57,000 in 24. Look, they've got some lumpy cadence in terms of production and some switchovers with the plant in central Illinois, but that number is weaker than the street was expecting. Adjusted EBIT loss guidance of $2.7 billion, CapEx 1.75, and they expect a modest gross profit by the fourth quarter. Again,
That's why Rivian is down right now. The stock is down 13%, 12.87%. All right, folks, this is the final countdown. We have 5 minutes to see if we will live or if we will die. Some of you may think I'm being hyperbolic, and maybe I am. But quite frankly, there's no fun in the stock market if we're not being hyperbolic, okay? If we were all just like, oh, we're just making, we're just making some money here, losing some money here. Like, no, these are the events. We need the blockbuster events to make us feel what it means to really chase financial freedom. I mean, what are we doing in the markets? Why are we investing in individual equities? Why are we not just throwing our money into the ETF? The reason we're doing that is because all of us think, hey, I'm, not a Wall Street hedge manager, but I can maybe manage some of my money. I can make some decisions. I can look at a company. I can analyze these things. I don't just have to be stuck in the machine that says that, you have to take your salary. I can actually have my own independence. And that's why we invest in individual equities. Well, if you do that, then the downside, which to me is an upside just because it's fun, and maybe I'm saying that because I don't own Nvidia, is that we get moments like this where we have to finally see what happens to some of the biggest companies in the world and the implications that has on every other equity. I mean, this is fun. To me, this is fun. This is really fun. Now, if it goes down 10%, this won't be that much fun, but this is the risk we take. This is the mental hurdles we have to go through. That, by the way, 99.9% of the world will never feel the feeling we're feeling right now in the next 4 minutes, because they don't invest, but we invest. So we're gonna see what ends up happening. Thank you, Passion Panda, for the $20 super chat, bro. You put in so much work. It makes me proud to be a follower since day one. We need to talk. Great work. Thank you so much, man, for the $20 super chat. I just appreciate you guys being here, and it'll be fun as a community to kind of see what ends up happening. Doug Franchuk says, I'm sick to my stomach. Cedric says, can you stop the gambling? Look, this isn't gambling. I don't have any short dated options on Nvidia or SMCI. Now, if you do in the chat, you're probably a little scared. And look, it is what it is. If you're going to take the risk, you're going to take the risk. But I mean, this is what it means to be an adult and make some big decisions and invest in individual equities, whether it's Palantir, Tesla, Etsy, Lucid, Rivian, whatever you invest in. It's personal finance. You make your own personal decisions. You have to live and die with the choices you make. And companies like Nvidia, whether it's fair or not, they affect the perceptual psychology, which is this, unique sociological phenomena that is the stock market. Nvidia really has no impact on a lot of these companies, but the market thinks they do. And, you can make an argument that GPU demand affects AI software demand. So there's the correlation between Palantir. It's not the best argument, but it is a argument. And as long as you have an argument in the market will interpret what they need to do. Did they announce a stock split? Did they announce a stock split? Do you guys think they will? I don't think they're going to do a stock split. I don't think they will. We got 2 minutes. Let me just type this in real quick. Nvidia stock split. I don't think they will. Yeah, there's no result yet. I think if Nvidia was smart, they should do a 5-for-1 stock. Hell, make it a 10. Dude, get this sucker to $67. Get this sucker to $67. I bet you a bunch of people will start buying some damn Nvidia. I might be one of them. Like, oh, $67? No, I'm just kidding. That doesn't matter. The split doesn't make it cheaper. The point is, look, if they do that, then, we'll see what happens. All right. We have literally 2 minutes. I'm pulling up NVIDIA's website right now. I'm going to keep the stock open right here. I'm on the website. And I will update as soon as I get an answer. I'll also have Twitter open because the website probably is not going to give an answer. So Twitter is really going to give the answer. And so we will see, and we'll see what the stock acts like immediately as soon as we get this news, press releases. Okay, so here we go. I'm on the website, and then I'm on Twitter, and now we're waiting. Now we have 1 minute, folks. Oh boy. Oh boy, oh boy, oh boy, oh boy. Woo! 60 seconds until we determine what the hell's happening. This has been hyped for a very long time. Stock's up 40% year to date. We've been waiting forever for this to happen. This is the moment. This is the final countdown where a decision is made. A decision will be made, and the market will decide what they want to do at this time. It is time. It is time. It is time. It is time. Oh boy. RF Randy, thank you for the $20 super chat for all the fans. We live for this. Thank you so much. Again, you guys don't have to send super chats. I just value you guys being here so much. You guys could have, spent a lot of places with your time right now. You guys are here with me. So thank you from the bottom of my heart. You guys don't have to send the super chats at all, but thank you for that. Okay. It is time. Is it 420? It's 420. Here we go. Nvidia is basically flat. I've got the numbers right, or I've got the potential numbers ready to go as soon as it comes out. And we should see. Okay, someone put it out. Oh boy. I don't know if this is correct. Someone said 20 billion in revenue versus 24 billion and 453 EPS miss versus 547. I don't know if that's correct, dude. I don't think that's correct. I don't think the expectations were that high. Is it tanking? No, it's up 1%. It's up. It's up. Yeah, I think that's the wrong post. I think someone got that wrong. The expectations were not $5.47. That's ridiculous. This is a problem with Twitter. People just tweet nonsense. Nvidia's up 3%. Okay, Nvidia's up 688. Nvidia's up 3%. So Rivian's down 15%. Nvidia's up. Now Nvidia's down. No, now Nvidia's up. No, now Nvidia's really up. It like went from 3% to 1%, now back to 2%. No numbers yet. I don't have the numbers yet. Do you have the numbers? Do you have the numbers? No, no one has the numbers. Okay, so we're still waiting. We're still waiting. I'm still waiting. Oh shit, it's in. I think this is in, guys. I think this is in. I think this is, we can trust. Yep, we got it. We got it. I believe this is in, guys. Record quarterly revenue of $22 billion. The street thought it would be 20. I think they beat by $2 billion on revenues. That's up 22% quarter over quarter, up 265% year over year. Holy crap. Record quarterly data center revenue of $18.4 billion. That's up 27% from last quarter, up 409% year over year. Full year revenue of $60.9 billion, up 126%. We're down 4%. We're down 4%. Stock's down 4%. These are incredible numbers. I don't know if these numbers warrant being down dramatically. Honestly, these numbers could potentially just leave it flat. I mean, these are not crazy numbers to maybe tank it. I mean, these are just exceptional numbers. Here's the stock right now. Here's the stock. Here we go. Down 2%. We're down 2% right now on Nvidia. We're down 2%. Guidance, yeah, I'm trying to pull up guidance because that's the big number. The street's probably dissecting that. Okay, so again, 22% quarter over quarter revenue growth, 265% year over year. Record quarterly data center revenue up 27% quarter over quarter, 409% year over year, and then full year revenue $16.9 billion. I need to see the net income. We don't have the net income yet, and then the guidance. Those are the next two things: net income and guidance. Their website still doesn't have it, so I'm using Twitter. Okay, here we go. Fourth quarter, so Q1 2024, here's guidance. $24 billion. Wow. The street expected $22.2 billion for Q1 2024. Nvidia is going to beat that by $2 billion. $24 billion Q1. Is the stock still down? The stock's like flats. I mean, it's down 2.9%, but it's not down that much. Data center revenue, 18.4. Gaming, they did 2.9 billion. The street thought 2.7 billion. Adjusted gross margins, holy crap, 76.7%. The street thought they would do 75.6%. They're up 1.9% on adjusted gross margins. That's not easy to do. I mean, that's incredible. Dude, these numbers are ridiculous. Like, if this thing tanks 10%, this is like the dip of a lifetime. These numbers are insanity. It looks like it might be headed to green now. It's barely down. Now it's down 0.85%. These numbers are just like, if Nvidia was not up 40% right now, Nvidia would be up 40%. Like if they just reported these numbers. Still red, but it looks like we might go green. Still red, but it looks like it might go green. Okay, I'm trying to get the net income. It's not on their website yet. Hold on. Here we go. Nvidia. Let's see if I can get this. Nvidia IR. Presentations. No, still don't have this one yet. If anyone has the press release, link it in the chat and I'll get it from the chat, but I don't have it yet. Yeah, it's recovering, dude. Look at it. It's barely down 0.4%. Let me pull up CNBC, see if they're talking about this. It's barely down now. Okay, here we go. We got the results. Let's look at this real quick, and then we'll talk. Here we go, and I'll get the rest of the numbers on my side.
With a beat on the top and bottom lines.
On that, and I think, again, the size of the auto business in the,
looks like the number came in at 18.4 billion for Q4 versus 17 billion expected, and of course that's what you need if you're going to get revenue beaten by $2 billion. Is you need strength in data center. What does that say about the continuing data center demand, and maybe about the other areas, including gaming as well, which you said would be a little difficult to parse out?
Right. So the fact that the number is so high and that they guided for an even higher number next quarter is a reflection of what we heard from the hyperscalers on their conference call. We heard from Amy Hood and Microsoft. We are accelerating our purchasing. We heard from Mark Zuckerberg very specific goals about the amount of GPU he needs. We heard from Amazon that they're finally getting access to supply. So that demand is still ramping through the year, and that's reflected in these numbers. I would just say Christina did a very good job reporting that the whisper number on the buy side was so much higher than the consensus number that that because they didn't quite get to that number, maybe the stock isn't showing the upside that it would ordinarily with this kind of result.
All right, we're going to go back to Christina. We're not going back to Christina. Pat, I'm going to go to you here because just looking at first quarter fiscal 2025 outlook here, in terms of margins, GAAP and non-GAAP gross margins expected
NVIDIA's up 1%.
to be 76.3, between 76.3 and then 77%, respectively, plus or minus 50 basis points. I guess walk me through the importance of gross margins as we do look to another year for this company where the expectations have been so strong and where, interestingly, the stock is now trading up about 1%.
Yeah, so NVIDIA's had pricing power for the past 18 months, particularly on its new line. When you can't get it, you can essentially name your price. And a car that would normally go for $20,000 being sold for $40,000 and even more on the open market, it's great. On the flip side, your cost of goods sold from folks like TSMC and the folks doing the high bandwidth memory are charging more. But net, the margins look incredible, and I'm glad to see there wasn't necessarily a movement down that you might expect as supply from TSMC wafer and packaging improved. So it's impressive.
Gil, in a way, it's remarkable that the move that we've seen in NVIDIA thus far, was initially lower. Now it's fractionally higher. And of course, you got to wait for the conference call for all kinds of color. Executives will have a lot to say as the afternoon commences. But this is a stock that the options market was expecting to have a dramatic move. And so in a way, Gil, it seems like modest moves based on these strong numbers might be a win for NVIDIA.
Yes, and I would say that as we start looking towards the conference call, what we're really going to be listening for.
All right, here we go. We got the numbers. We got the numbers officially on the website. Rivian's down 20%. Goodness gracious. Let me show you guys the stock real quick, then we'll get into the numbers. The call is going to be in 30 minutes, if I'm not wrong. The call should be in 30 minutes. NVIDIA's up 2%. Etsy's down 5.6. Rivian down 15.5. Palantir's up. There you go. So Palantir's up a little bit. Lucid's down 7%. Okay, so the fall for Lucid finally kicked in. Tesla's down 0.84%. Mag 7, let me look at those real quick. Mag 7, Microsoft's green, Meta's green, Google's green, Amazon's green, Nvidia's green, Tesla's a little red, and then Apple's a little red. So the hyperscalers are a little green based on Nvidia being now up 3%. What's so crazy about Nvidia being up 3% is that like no one cares because they were $750 literally like 3 days ago. So now they're at 696 and we don't care. But like, I mean, the options market thought this would go 11% up or down. It's only up 3% right now. And so nothing too crazy from that front as soon as earnings dropped. We'll see how things turn out on the earnings call that we'll listen to in a bit. Here are the numbers. ARM is up 4% as well. Okay. So I want to see net income. We already looked at the top line numbers. There you go. We talked about that. For fiscal 2024, revenue was up 126%, $60 billion a year. GAAP earnings per share was 11.93, up 586% year over year. We expected that. Jensen Huang says, accelerated computing and generative AI have hit the tipping point. Demand is surging worldwide across companies, industries, and nations. Jensen Huang was just at the UAE. And I mean, like, dude, robotics, medicine, pharmaceuticals, governments, the demand for generative AI. This is why Jensen Huang thinks it's going to be a bigger opportunity than the internet itself. And so he seems pretty bullish. He says, our generative data center platform is powered by increasingly diverse drivers, demand for data processing, training, and inference from large cloud service providers and GPU specialized ones, as well as from enterprise software and consumer internet companies. Vertical industries led by auto, financial services, and healthcare are now at a multi-billion-dollar level. Those are multi-billion-dollar industries inside of the overall pie that NVIDIA is going after in terms of selling generative AI. NVIDIA RTX, produced less than 6 years ago, is now a massive PC platform for generative AI, enjoyed by 100 million gamers and creators. This year ahead will bring major new product cycles with exceptional innovations to help propel our industry forward. Come join us at next month's GTC. Cash dividend of 4 cents a share, March 27th. Okay, where's the net income? Wow. They did They did $12 billion of net income, guys. It's at 716. The stock's up. The stock's up. Oh my God, the stock's up. I didn't see. Yeah, look at that. It's up 7%. Holy crap. There you go. Guys, they did 12.2 billion in profits. That is up 1,200% from last year. I mean, that's just insane. That is incredible. That is insanity, dude. AMD, where's AMD? Let's add AMD to this. AMD, where's AMD? AMD is up 3%. Palantir is up 2.3%. Everyone was like, why are you correlating Palantir with NVIDIA? It's because of this shit, because the market's just going to buy up these AI names if NVIDIA is going to the moon. So there you go. Palantir's up 2.4%. NVIDIA now 6%. Now, there's definitely going to be some sell side pressure after hours. People are going to take their profits. People bought in today at 680. So a run to 717, I mean, people will take their 10% or their 8% and leave. But there will definitely be people buying at 718 as well. There you go. There you go. Where's SMCI? Where's SMCI? SMCI. Wow, that's up 8%. Oh my goodness, dude. Oh my goodness. This is just insane. I mean, this is just, wow. Their webcast is going to be, in 30 minutes. So we'll get a reminder in 15 minutes. Wow. Here you go. Where's Robinhood? Did Robinhood crash? Where's Robinhood? Robinhood's up. Robinhood's up. Why did you say Robinhood crash? Robinhood's up. So Robinhood is up. Palo Alto Networks is up a little bit. Look at SPY. SPY's up almost 0.5% after hours. NVIDIA up 6%. Palantir up 2.4%. Shopify up a little bit. And Novix is up a little bit. SoundHound is up 8%. This is a company NVIDIA invested in a couple days ago, or like last week. Where's Lunar? That thing got halted. I haven't looked at it all day. Where's Lunar? Wow, why isn't it showing up on the search? That's so weird. You guys see that, right? It's not showing up. Did they get delisted from the stock market? Where the hell is the stock? Let me check Robinhood. Lunar is down 0.64%. Lunar's down 0.464%. Okay, so Lunar is down just a little bit. I don't know why it's not loading, but it was there. Okay, so Lunar's down a little bit. Teladoc is down about 0.45%. And then you got NVIDIA, that's up. Rivian's now down 16%. NVIDIA down 6% on the day. NVIDIA down 6% on the day. All right, let's go back to CNBC. Let's see what they're saying, and then we'll keep going. Okay, here we go. Wow.
Joining us now to discuss NVIDIA and the ripple effects that we do seem to be getting, at least in overtime, Byron Dieter, partner at Bessemer Venture Partners. Byron, welcome. Good to see you again. I was just talking to an entrepreneur today who's about to announce a Series C, which I think you might be involved in, where that money is going. And part of it is going to accelerator chips. Maybe that helps to explain how NVIDIA has managed to beat these already high expectations.
Thanks, John. Great to be back, especially in this fun day in tech. And indeed, one of your prior guests called it hype. I call it market demand. This AI wave is real, and it's fueling a tremendous pull-through of real spend.
So what about, though, the predictions from the CEO of Databricks, the CEO of MinIO as well, that these accelerator chips are going to get cheaper, that there's going to be competition that comes in, brings prices down? Do you buy that, or is NVIDIA so far ahead with such unique technology that it's going to maintain pricing power and volume growth?
A little bit of yes and yes. I absolutely believe that the demand is there and increasing. And so what Ali was commenting about was specifically the supply trends that he sees coming as the hyperscalers, AMD and Intel, and dozens of pure play startups come in to try to compete for this GPU market. And so that's entirely a game on how fast can they innovate, how can these challengers emerge, and can they eat into this dominant market share that NVIDIA has maintained. Right now, they've maintained a majority of the AI processing market share while this space has grown at a massive rate. And it's been impressive to watch. People have been expecting perfection from them. And frankly, they basically delivered that again today.
Yeah. And I mean, just to feed off of what you just said, I mean, the fact that NVIDIA is up, but AMD is also up. Intel is also higher in sympathy here. How much does that speak to how quickly this market is growing and outpacing, to your point, that the demand is outpacing the supply, and even as competitors do start to move to come online?
Yeah, simply put, the artificial intelligence wave is the next big trend in software. It is this next horizon in cloud computing, and it's going to continue to pull through massive demand for many years ahead. These software companies aren't building their own stacks in the vast majority of cases, and so they are dependent on these hyperscalers and infrastructure providers to power this revolution. And so the demand curves that we see within the private sector, which is the leading indicator to the pull through of these chips, is just building. The big question out there and what people are trying to anticipate is how will these new entrants come in and start to compete for delivery? And so that hardware battle is on, but I can tell you with very high confidence that the iceberg under the surface that people can't yet see of software companies building in the public markets, private markets, soon be public markets, is.
All right, SMCI is up, Nvidia is up, guys. All of these companies are just up. Palantir is up 3% because of this shit. Like Nvidia's up now 5.6%. It was at 720 at one point. AMD is up 2.3. Let's go to the semis. I actually have a semis playlist right here. Semis. Look at this. Look at the left-hand side of my screen. They're all green after hours. ARM's up 5%. Lam Research up about 1%, Marvel up 2.4%, Taiwan Semi 1.6, Qualcomm up 0.32, Broadcom 1.83, ASML 1.19, On Semiconductor about 0.5, Intel 0.37, SMCI 7.8, AMD 2.56, and Nvidia 6 freaking percent. They're up. They're up, they're up, they're up, they're up, and it doesn't look like they're slowing down. It really doesn't. I mean, like, we'll see how the market internalizes it in a little bit, but so far the market does not care, dude. So far the market does not care. They're buying. They're absolutely buying. Carr says, why the hell were we surprised? Well, when the thing collapses during the day and everyone gets super scared, then I mean, like, you know, it creates fear. It created a lot of fear for me today. I mean, it created a ton of fear for me today. Now, granted, I don't think we're out of the blue here. QQQ after hours is up about 0.56%. The S&P is up about 0.3%. I don't think we're out of the blue here because regardless of Nvidia doing well, at the end of the day, let's check on Bitcoin as well. We might be facing a little bit of a localized top, even if AI demand is there. And I think the market in the next couple of weeks, especially with that February CPI data that comes out in 2 weeks, that's going to determine a lot about where the market wants to go. But the market can't say AI is a bubble. You cannot say this is a bubble, dude. You've got to eat different types of gum than bubble gum. You've got to have different types of gum than bubble gum. You can't eat a bubble gum right now. You can't. I mean, like these numbers are not bubblish. These numbers are real. These numbers are insanity. Let's go back to their financials. These numbers are unreal, and so it justifies the multiple, at least somewhat of a multiple. Maybe not $800, $900 a share, but it justifies a multiple. The question now is if they can keep this going, and if the market is ready to keep going higher than 503 on the S&P. We will see. We will see. So right now, gross margin is 76%. Look at this. Full year, or I want to go to full year 2023. They did revenue of 26 billion. They did revenue of 60 billion. Gross margin, look at this, was 56.9%, 72%. Operating expenses relatively the same. I mean, they increased revenue by 126%. They increased operating income by 681%. They increased net income by 581%. They increased diluted earnings per share by 586%. But their operating income went up 2%. This is a technology company. I mean, as Mitch says, it's growing double than its price to earnings. This is why SaaS companies are so excited when you can grow all of these top line metrics, triple digits, and only keep your expenses up 2%. I mean, dude, like the market can't look at that and be like, this is a bubble. This isn't real. And then when we hear Jensen Huang talk in 20 minutes, it's probably going to seem more real than it is. They didn't announce a stock split to what I'm seeing. I think that would have been big news if they did that. I don't see a stock split anywhere. So they're probably not doing that. Maybe they do that in the next couple of weeks, but not now. Data center revenue. Can you guys see this? Yeah. Data center revenue, 18.2 billion. Fourth quarter revenue was 2.9 billion on gaming, 463 million on professional visualization. That's one of the parts of their business. Automotive did 281 million for them. That's down 4% year over year. That's up 8% quarter over quarter. Full year revenue on automotive was 1.1 billion. I would imagine that's like all the intelligent AI platforms they're giving to various automakers that are trying to implement AI into the vehicles themselves. I don't know if they count Dojo as a part of that. Maybe not. I don't know. Or like Tesla, whatever Tesla pays for them. I don't know if that's the case. Maybe that's more data center revenue, but that is down a little bit year over year. Revenue is expected to be 24 billion next quarter. If they do, let's just do trailing. Let's do 24 times 4. If they do 24 times 4, that would be 96 billion. This year they did 60 billion. So that would still be growth of 60%. That would still be growth of 60% if they keep it going from there. I mean, if they keep that going, yeah, they would still be growing 60% year over year if they only do if their first quarter revenue for 2024 is flat throughout 2024 in general, throughout Q2, Q3, Q4. So I mean, like they can be flat and they can still grow high double digits. Let's look at some of the other guys. Robinhood's up a little bit after hours. CleanSpark's up about 2%. Coinbase is up 1%. Bitcoin is up a little bit. It's up like 300 points. Microsoft, let's go to Max 7. Microsoft is up 403. Google's up. Meta's up. Amazon's up. Meta's at 474. We know Meta buys a ton of GPUs from Nvidia that fuels their AI advertising, and that's why Meta crushed. Remember, Meta was 390 before their earnings, and they hit a high of 488 because Nvidia GPUs have helped them do better advertising. And Nvidia right here is 6%. Nvidia's up 6%. Mag 7's green. Yeah, even Tesla. Well, Tesla's a little red, but that's okay. And then Rivian. Where's Rivian? Rivian is down 14.8%. And Etsy's down 3%. Etsy recovering a little bit. Dutch Bros is up now 3%. Lucid is down 4%. That's recovering a little bit. And Rivian is down 15%. Let's go back to CNBC and see what they're saying. But, oh my God, that's insane. Now we just got to see if it carries over. We got the call in about 18 minutes. Okay, here we go. Loading. One sec.
Titan and field automation that are rolling this in, and they're getting into hundreds of millions or billions of dollars of scale already. The most watched IPO of this year will probably be Databricks. There's a lot of speculation on if and when they go out, but they're challenging Snowflake head on, and they're benefiting from this reacceleration that the AI pull through is causing. And so there's dozens of these high quality names worth billions of dollars in the private markets that people are going to start to see turn public over the coming quarters.
Okay, Byron Dieter, thanks for joining us.
Okay, we'll get back to them in a second. So let's take a look at some of these other stocks. I mean, what's Twitter saying as well? How's Twitter reacting? Let's go to my tweet that I tweeted. I tweeted the results. Let's see how people are reacting. Let's see if people think it's good or people think it's bad. So here we go. I tweeted, oh my goodness, these results are crazy. All right, we got what a crush. Someone thinks it's going to dump to pump. Vitaly says that's insane. Someone here has a valuation of NVIDIA with a fair value of 620. Right now it's at 720. Insane. Nancy knows what she's doing. Dude, that's the other thing I tweeted like a couple hours ago. I was like, maybe we need to relax. Maybe we really need to relax because Nancy knows what she's doing. We know Nancy Pelosi bought in the money call options, about $2 million worth of it in January. So there you go. Oh boy. 6.5%. Everyone's this is one of my friends, OT. She's super excited. She has a ton of Nvidia. Oh boy, dude. People are excited. Market's exciting as well. It was out of the money. No, it was in the money, dude. She bought their strikes were like $300 strikes in the money for 2025, which was a little cheaper than buying the stock, but it's the same price as buying the stock. She bought like 2.5 million of it. So she bought a lot of it. Nvidia's up 6.3%. 6.3%. And it's holding, dude. She bought 220 strikes. Okay, so that's even better. She bought 220 strikes. Databricks IPO, probably, I mean, look, as soon as Databricks IPOs, we're at the top. We are officially at the top because if the IPO tech market opens up for companies like Databricks, we are absolutely at the top. But I would imagine maybe later this year if the Fed cuts, but if the Fed doesn't cut, then that's not going to happen. Palantir is up 3% still. So Palantir 2339. Again, the argument with Palantir is more GPU demand from Nvidia. It means more demand from pharmaceutical companies, from healthcare, from hospitals, from robotics companies, etc. All those companies, not only do they need chips, They need enterprise AI platforms, which is what AIP is. They need to ontologize their data, which is what Foundry is. So all of this stuff, along with the government space, will have third-order derivative effects on Palantir. Even if that's not the best argument, that is a argument, and that is why the market is up for them. Let's look at SaaS companies in general. So look at the SaaS playlist. It's pretty green across the board. After Hours, MongoDB, Teams, Snowflake, Datadog, Palantir up 3.08% now. Cloudflare, CrowdStrike, Zscaler. Zscaler took a beating today. They're up. Wait, is Palo Alto Networks still down? Are they still down? They had a bad day. They are, wow, they're up 2%. Go down 28%. NVIDIA brings you up 2%. Oh my gosh, dude. Oh my gosh. Wow. Wow. SMCI, where's SMCI? We haven't checked on that in a second. SMCI, we got the call in 15 minutes. Oh my God, SMCI is up 9%. SMC is back at 804. SMCI today, well, 2 days ago was at 692. Now it's at 805. It's up 10%. It's up 10%. Bros is up now. Yeah, Bros is up a little bit. Bros is up 3.85%. Okay, so Bros is up. And then Rivian still took a beating. Rivian took a nasty beating, dude, down 13%. Again, we saw that they couldn't get their guidance in order, and they're not profitable. They're still not profitable. When you lose money, this is what ends up happening, dude. At least in this market, this is what ends up happening. Okay, so let's see. All right, so let's go back to CNBC. Here's what they're talking about.
Welcome back to Overtime. NVIDIA shares in the green, beating on both lines, beating on data center revenue. For more on NVIDIA and its impact on the AI trade, let's bring in Lux Capital co-founder and managing partner Josh Wolf. Josh, it's great to have you back on the show on a day where we are seeing NVIDIA, sort of the main player when you talk about so-called picks and shovels of generative AI. You're seeing them report earnings that are up 769% for income year over year for the quarter. It speaks to how quickly and how aggressively AI applications, or I guess the ability for infrastructure for applications, is being adopted. Walk me through it.
Well, it's interesting. It was probably 8 years ago, I got a preview of NVIDIA becoming the soul of the new machine. We were investors in a company called Zoox. Amazon would buy these guys. And I was like, what are these guys training these new machines on for autonomous vehicles? And they said these new NVIDIA chips. That was when NVIDIA was a $15 billion market cap. At the time, Intel was a $150 billion market cap. You fast forward to today, over $1.8 trillion, just absolutely incredible. I do feel, though, right now you're seeing a flood of retail investors start to get excited about NVIDIA. They're probably 5 years too late. I always say that you want to be today where you should have been 5 years ago. You have a dynamic where $1.8 trillion market cap against Google, roughly $1.8 trillion market cap, they're generating $60 billion of revenue. Remember, Google is generating $60 billion of cash flow. So I would just say it is real. The infrastructure build out is serious. And it is also a time for caution and not to see this as like some crazy meme stock. This is being, in my sense, overbuilt right now, which will be massively deflationary for many of these AI chips.
Interesting.
That's an interesting take. Josh Wolf, I actually know this guy. He's been in the startup ecosystem for a long time. His argument is NVIDIA at 15 billion was, when it was just starting, but now it's getting run up by retail and there's going to be a pullback, which might actually be good for the broader AI ecosystem.
Okay, so when you say 5 years too late, what, especially as a retail investor, and I know you're focused on the private markets and VC venture capital specifically, but when we talk about 5 years too late, what would be right on time right now?
It's really interesting and almost a little bit contrarian. Everybody is racing to the future right now. And, it's a time when rates have risen for the past 2 years. When rates are rising, it flips the dynamic that we saw for the past 10 years, which is low rates are like a tractor beam for the future. They are pulling far out, fanciful ideas that are maybe 20-year things into these 20-month frenzied projects. Now with rates rising, a lot of entrepreneurs and a lot of venture capitalists, you have to ask the question, have you learned the lesson of the past few years? I know we're in an election year. I know the White House and the Fed want to create a wealth effect, want to fight inflation. These two things are sort of incompatible. I actually think that the contrarian thing to do right now that people are going to realize 5 years hence is not race to the future to fund space elevators and fusion and all kinds of crazy stuff that we ourselves love to fund, but we like to reduce that gap between science fiction and science fact. Right now, we're obsessed with the theme of maintenance. You think about CapEx. there's two parts of CapEx. There's growth, which everybody's been funding, and maintenance, which nobody's funding because nobody wants to think about the trillions of assets that are there right now that should be fixed. That's in defense, that's in biotech, that's in infrastructure, that's in artificial intelligence, specifically for the open source software systems that need to be maintained by the likes of companies like Hugging Face and Together Compute.
Josh, I know a lot of VCs would love to see that this NVIDIA thing is overdone because so much of the money that they're giving to these startups is having to be spent on accelerators and compute. But what if NVIDIA is actually able to maintain this lead they have, and if the nature of the data center has fundamentally changed?
Well, remember what, John, you make a great point. What any one company does individually is rational. Facebook building out, Microsoft building out, Google building out, NVIDIA building their own clouds, lots of other providers trying to give you compute access through NVIDIA chips. What happens though collectively is it's irrational. And there has never been a boom where we haven't seen something get overbuilt. So I was a massive bull on NVIDIA going back 8+ years ago. And I'm not a bear, but I just think it's a time for caution that what can go on forever will eventually stop. And I do think that this is going to end up being deflationary. I think lots of other companies are looking at how do we take AMD, pair it with new languages like Python to take on NVIDIA and CUDA and give people alternatives. So I would be more interested at the moment in AMD over NVIDIA, but I do think NVIDIA's got a pole position. There's going to be a lot of alternatives. Again, you look at something like Together Compute, massive distributed computing, doing it way cheaper.
That said, it seems like we're in a period where AI accelerators, where these chips are the currency of the future, and all startups need access to them in order to build the kind of lead that they're going to need in their respective industry that they're targeting in order to pull ahead. Isn't that the case right now?
It is. And again, do you need OpenAI plus Anthropic and Claude plus 10 other large language models? Many of these things are going to see a winner takes all, and the massive amounts of money that they're raising. We're talking billions of dollars, and you nailed it. A lot of that money has been and is going to NVIDIA, but I think that starts to level off. What's really interesting to me is the next wave, and that's not going to be just large language models. That's going to be in robotics. I can tell you that there are some really cutting edge teams right now coming out of the likes of OpenAI and DeepMind and elsewhere to focus on AI for robotics. It's a totally different infrastructure that they're going to need. Same thing for biology, automated wet labs and robots doing scientific experiments. That to me is the near-term future of maintaining the cutting edge for both biotech and for AI.
I think this guy is just trying to pump his VC investments. Dude, like, I don't know what the fuck this guy's talking about. I mean, like, I kind of get his point. NVIDIA's up 8.3%. I get it, but I'm also just like, I mean, dude, in the public markets, if you put up these numbers, you're going to be rewarded. There's no company in the world putting up these numbers. You're going to get heavily rewarded. So, I mean, yeah, you can pump your startup investments, which might go somewhere, which might not go somewhere. But NVIDIA is the backbone of all of those startups. NVIDIA is the backbone of all of those companies becoming big AI enterprises because they all need chips, they all need GPUs. And NVIDIA right now up 8%. Where's Palantir? Palantir up 4.35%. Palantir making a run at $24 again. Wow. Again, a lot of people said Palantir and NVIDIA are not correlated. There is no reason Palantir would go up almost 5% right now if NVIDIA did not report good numbers. It's just that simple. It's not too complicated. There is a correlation in the broader equity markets in terms of how algorithms think of AI names together, and they put Palantir in that bucket, whether you love it or hate it. AMD is up 4.2%. SMCI is up 10.4%. 10.4%. Bros is tracking with NVIDIA. No, Bros actually had earnings. So Dutch Bros had, I think they were decent earnings. They weren't horrible. They're up 6.5%. They slightly missed on EPS, but they beat on revenue. So Dutch Bros is up. But yeah, I mean, look, that guy's a VC. VCs are not public investors, dude. They don't care about the public markets. They care about investing in a company when there's a founder, there's an idea, and the valuation is a couple $1 million, right? Their whole mentality is different from people that are doing this for a living in the equity markets. And it's a different game. It's not bad or good. It's just a different game. But his perspective there, I don't know if that's necessarily correct. Saying that we're too late, I don't know, dude. 1.67 trillion for a company that's growing net income 700% year over year. And these are big numbers. These are off of a pretty decent base. Now, if that can continue, does this thing go to 4 or 5 trillion in the next 10 years? If demand really is as accelerated as NVIDIA, as Jensen Huang says, that's not that insane. People got Tesla going to fucking 10 trillion. Well, you think NVIDIA can't go to 3-4 trillion over the next decade? I think that's possible. Obviously, the numbers just have to keep going up, but I think it's very possible. Robinhood Nvidia chart looks like second stage has kicked in. Let's go to Robinhood as well. How's Hood doing? Robinhood. Wow, Robinhood's up 1% after hours. Well, it's not just Robinhood. The whole market's up. S&P is at 499. Nvidia's taken up the whole damn market, man. SoFi is up 1%. I don't know what the correlation between SoFi and Nvidia is. I don't know what. I can't make that argument. Coinbase is up 2.9%. Rocket Labs is up 1%. Verizon's down a little bit. MicroStrategy is up. Open Doors up. CleanSpark's up 3%. Google's up about 1%. DraftKings is up 0.4%. Yeah, Nvidia's, I mean, I guess the entire market is being bought up because the argument is from at least the algorithms that if Nvidia does well, market should keep doing well. Why isn't PayPal up? I don't know, dude. I at this point with PayPal, I don't know what's gonna happen. PayPal's up 20 cents. There we go. We got 20 cents on PayPal. Not horrible. Not horrible. Not bad. Not horrible. Leaps on Robinhood, January 2026, $10 strike should print. Yeah, dude. I mean, I leaps on Robinhood. I have a hefty Robinhood leap position. We'll see how that plays out. I did trim a little bit today because I was getting scared during the day. I mean, look, I know it's always hindsight is always 2020, but if Nvidia didn't put up these numbers, it would get pretty ugly. And we still don't know tomorrow what's going to happen because it's up 8.5%. It has to sustain this, which means the market has to buy in tomorrow versus sell off and take profits. If it goes back down 8%, which means it goes back to where it was before earnings, Nvidia would only be up 40% year to date, which the numbers they put up are incredible. But still, you know, it's up 40% year to date. That's still a decent amount. And so we're going to have to see this thing either get revalued or the guidance come in a little bit stronger for full year 2026 for valuations to change across the street. Oh boy. Jonathan says having one company holding up the whole market is scary, but if the new economy is based on processing power, it makes sense. Yeah, I mean, that's a good point. It is kind of scary seeing Nvidia take up the whole market. But I mean, the question I was asking about a month ago, and we did a bunch of podcasts on this, and we were talking about this, is like Nvidia keeps saying we are in a market opportunity that is bigger than the internet. Accelerated computing, generative AI, it's bigger than the internet itself. When I think of the internet, I think of like billions of people across the world use this www to be able to access information, tools, the amount of businesses that are built, their internet's the reason we're all here today. To imagine generative AI is bigger than that. I mean, you've got to have a hell of a vision, and those numbers have to support that vision. And so far, the numbers they put up, it's supporting that vision. It is absolutely supporting that vision. All right, so we got the call in about 2 minutes. I've got this loaded up. And so we will hear from them in 2 minutes, and we'll see what they have to say. This is going to be pretty exciting, folks. This is going to be pretty exciting. I think Jensen Huang's going to talk his shit. Okay, let me show you guys something also. I did something yesterday. I wish I did this 2 days ago because it would have been so much better, but I did this yesterday. Let me show you guys. You guys are think I'm such a clown for doing this. It's not NVIDIA options or anything, okay? But I did this yesterday. I thought it would come in by today, and it would have been super cool. I made a purchase, okay? Made a purchase. Don't hate me for the purchase, but I made the purchase. I bought a black leather jacket from Amazon, okay? I bought a black leather jacket. I wanted to look like Jensen Huang on the earnings call. It didn't come in time. I thought it might come in today. It's going to come in tomorrow. I bought a black leather jacket for $47. Kill me, okay? I bought the jacket. I wanted to look like Jensen Huang during the call. But I'm not going to be able to look like him today. So tomorrow for the market close, if the Amazon package gets in there by like 2 p.m. If not, then Friday. Dude, I think I'm going to wear this shit every day. This shit looks so cool, dude. Look at this shit. This looks so cool. These are the colors. I could have got black. I could have got brown. I could have got dark brown. I was like, yo, this black one, this one looks legit. So I'm gonna be your boy's gonna look like Jensen Huang. We're gonna do it. I wish I had it today though. That would have been so much fun. Ian says he sold SMCI at $994 and he's up. How much are you up, Ian? How much are you up? It's not real leather, dude. It's $47 from Amazon. I doubt it's real leather. You bought back in at $743. Wow. Successful day trading, man. You sold that at 265%. Wow, not bad. That's a good trade. It's not a bad trade. Palantir's 24. Wow. Palantir's 24. Palantir hits 24. We're still waiting for the call. Palantir, yeah, look at that. Up 5.6%. $24.08. Nvidia's up 10%. There we
Good
go.
afternoon. My name is Rob, and I will be your conference operator today. At this time, I would like to welcome everyone to the NVIDIA's fourth quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you. Simona Jankowski, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the fourth quarter and fiscal 2024. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the first quarter of fiscal 2025. The content of today's call is NVIDIA's property. It can be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, February 21st, 2024, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Simona. Q4 was another record quarter. Revenue of $22.1 billion was up 22% sequentially and up 265% year on year, and well above our outlook of $20 billion. For fiscal 2024, revenue was $60.9 billion and up 126% from the prior year. Starting with data center. Data center revenue for the fiscal 2024 year was $47.5 billion, more than tripling from the prior year. The world has reached a tipping point of new computing era. The $1 trillion installed base of data center infrastructure is rapidly transitioning from general purpose to accelerated computing. As Moore's law slows while computing demand continues to skyrocket, companies may accelerate every workload possible to drive future improvement in performance, TCO, and energy efficiency. At the same time, companies have started to build the next generation of modern data centers, what we refer to as AI factories, purpose-built to refine raw data and produce valuable intelligence in the era of generative AI. In the fourth quarter, data center revenue of $18.4 billion was a record, up 27% sequentially and up 409% year on year, driven by the NVIDIA Hopper GPU computing platform, along with InfiniBand end-to-end networking. Compute revenue grew more than 5x, and networking revenue tripled from last year. We are delighted that supply of Hopper architecture products is improving. Demand for Hopper remains very strong. We expect our next generation products to be supply constrained as demand far exceeds supply. Fourth quarter data center growth was driven by both training and inference of generative AI and large language models across a broad set of industries, use cases, and regions. The versatility and leading performance of our data center platform enables a high return on investment for many use cases, including AI training and inference, data processing, and a broad range of CUDA accelerated workloads. We estimate in the past year, approximately 40% of data center revenue was for AI inference. Building and deploying AI solutions has reached virtually every industry. Many companies across industries are training and operating their AI models and services at scale. Enterprises across NVIDIA AI infrastructure through cloud providers, including hyperscales, GPU specialized, and private clouds, or on-premise. NVIDIA's computing stack extends seamlessly across cloud and on-premise environments, allowing customers to deploy with a multi-cloud or hybrid cloud strategy. In the fourth quarter, large cloud providers represented more than half of our data center revenue, supporting both internal workloads and external public cloud customers. Microsoft recently noted that more than 50,000 organizations use GitHub Copilot Business to supercharge the productivity of their developers, contributing to GitHub revenue growth accelerating to 40% year on year. And Copilot for Microsoft 365 adoption grew faster in its first 2 months than the 2 previous major Microsoft 365 Enterprise Suite releases did. Consumer internet companies have been early adopters of AI and represent one of our largest customer categories. Companies from search to e-commerce, social media, news and video services, and entertainment are using AI for deep learning-based recommendation systems. These AI investments are generating a strong return by improving customer engagement, ad conversation, and click-throughs rates. Meta, in its latest quarter, cited more accurate predictions and improved advertiser performance as contributing to the significant acceleration in its revenue. In addition, consumer internet companies are investing in generative AI to support content creators, advertisers, and customers through automation tools for content and ad creation, online product descriptions, and AI shopping assistance. Enterprise software companies are applying generative AI to help customers realize productivity gains. Early customers we've partnered with for both training and inference of generative AI are already seeing notable commercial success. ServiceNow's generative AI products in their latest quarter drove their largest ever net new annual contract value contribution of any new product family release. We are working with many other leading AI and enterprise software platforms as well, including Adobe, Databricks, Getty Images, SAP, and Snowflake. The field of foundation large language models is thriving. Anthropic, Google, Inflection, Microsoft, OpenAI, and xAI are leading with continued amazing breakthrough in generative AI. Exciting companies like Adept, AI21, Character AI, Cohere, Mistral, Perplexity, and Runway are building platforms to serve enterprises and creators. New startups are creating LLMs to serve the specific languages, cultures, and customs of the world's many regions. And others are creating foundation models to address entirely different industries, like recursion, pharmaceuticals, and generative biomedicines for biology. These companies are driving demand for NVIDIA AI infrastructure through hyperscale or GPU specialized cloud providers. Just this morning, we announced that we collaborated with Google to optimize its state-of-the-art new Gemma language models to accelerate their inference performance on NVIDIA GPUs in the cloud, data center, and PC. One of the most notable trends over the past year is the significant adoption of AI by enterprises across the industry verticals, such as automotive, healthcare, and financial services. NVIDIA offers multiple application frameworks to help companies adopt AI in vertical domains such as autonomous driving, drug discovery, low latency machine learning for fraud detection, or robotics, leveraging our full stack accelerated computing platform. We estimate that data center revenue contribution of the automotive vertical through the cloud or on-prem exceeded $1 billion last year. NVIDIA Drive infrastructure solutions include systems and software for the development of autonomous driving, including data ingestion, curation, labeling, and AI training, plus validation through simulation. Almost 80 vehicle manufacturers across global OEMs, new energy vehicles, trucking, robotaxi, and Tier 1 suppliers are using NVIDIA's AI infrastructure to train LLMs and other AI models for automated driving and AI cockpit applications. In effect, nearly every automotive company working on AI is working with NVIDIA. As AV algorithms move to video transformers and more cars are equipped with cameras, we expect NVIDIA's automotive data center processing demand to grow significantly. In healthcare, digital biology and generative AI are helping to reinvent drug discovery, surgery, medical imaging, and wearable devices. We have built deep domain expertise in healthcare over the past decade, creating the NVIDIA Clara healthcare platform and NVIDIA BioNeMo, a generative AI service to develop, customize, and deploy AI foundation models for computer-aided drug discovery. BioNeMo features a growing collection of pre-trained biomolecular AI models that can be applied to the end-to-end drug discovery processes. We announced Recursion is making available for the proprietary AI model through BioNeMo for the drug discovery ecosystem. In financial services, customers are using AI for a growing set of use cases, from trading and risk management to customer service and fraud detection. For example, American Express improved fraud detection accuracy by 6% using NVIDIA AI. Shifting to our data center revenue by geography, growth was strong across all regions except for China, where our data center revenue declined significantly following the U.S. government export control regulations imposed in October. Although we have not received licenses from the U.S. government to ship restricted products to China, we have started shipping alternatives that don't require a license for the China market. China represented a mid-single-digit percentage of our data center revenue in Q4, and we expect it to stay in a similar range in the first quarter. In regions outside of the U.S. and China, sovereign AI has become an additional demand driver. Countries around the world are investing in AI infrastructure to support the building of large language models in their own language, on domestic data, and in support of their local research and enterprise ecosystems. From a product perspective, the vast majority of revenue was driven by our Hopper architecture, along with InfiniBand networking. Together, they have emerged as the de facto standard for accelerated computing and AI infrastructure. We are on track to ramp H200 with initial shipments in the second quarter. Demand is strong as H200 nearly doubles the inference performance of H100. Networking exceeded a $13 billion annualized revenue run rate. Our end-to-end networking solutions define modern AI data centers. Our quantum InfiniBand solutions grew more than 5x year on year. NVIDIA Quantum InfiniBand is the standard for the highest performance AI dedicated infrastructures. We are now entering the Ethernet networking space with the launch of our new Spectrum-X end-to-end offering, designed for an AI optimized networking for the data center. Spectrum-X introduces new technologies over Ethernet that are purpose-built for AI. Technologies incorporated in our Spectrum switch, Bluefield, CPU, and software stack deliver 1.6x higher networking performance for AI processing compared with traditional Ethernet. Leading OEMs, including Dell, HPE, Lenovo, and Supermicro, with their global sales channels, are partnering with us to expand our AI solution to enterprises worldwide. We are on track to ship Spectrum-X this quarter. We also made great progress with our software and services offerings, which reached an annualized revenue run rate of $1 billion in Q4. We announced that NVIDIA DGX Cloud will expand its list of partners to include Amazon's AWS, joining Microsoft Azure, Google Cloud, and Oracle Cloud. DGX Cloud is used for NVIDIA's own AI R&D and custom model development, as well as NVIDIA developers. It brings the CUDA ecosystem to NVIDIA CSP partners. Okay, moving to gaming. Gaming revenue was $2.87 billion, was flat sequentially and up 56% year on year. Better than our outlook on solid consumer demand for NVIDIA GeForce RTX GPUs during the holidays. Fiscal year revenue of $10.45 billion was up 15%. At CES, we announced our GeForce RTX 40 Super Series family of GPUs. Starting at $599, they deliver incredible gaming performance and generative AI capabilities. Sales are off to a great start. NVIDIA AI Tensor Cores in the GPUs deliver up to 836 AI TOPS. Perfect for powering AI for gaming, creating, and everyday productivity. The rich software stack we offer with our RTX GPUs further accelerates AI. With our DLSS technology, 7 out of 8 pixels can be AI generated, resulting up to 4x faster ray tracing and better image quality. And with the Tensor RT-LLM for Windows, our open source library that accelerates inference performance for the latest large language models, generative AI can run up to 5x faster on RTX AI PCs. At CES, we also announced a wave of new RTX 40 series AI laptops from every major OEM. These bring high-performance gaming and AI capabilities to a wide range of form factors, including 14-inch and thin and light laptops. With up to 686 TOPS of AI performance, these next-generation's AI PCs increase generative AI performance by up to 60x, making them the best-performing AI PC platforms. At CES, we announced NVIDIA Avatar Cloud Engine microservices, which allow developers to integrate state-of-the-art generative AI models into digital avatars. ACE won several Best of CES 2024 awards. NVIDIA has an end-to-end platform for building and deploying generative AI applications for RTX PCs and workstations. This includes libraries, SDKs, tools, and services developers can incorporate into their generative AI workflows. NVIDIA is fueling the next wave of generative AI applications coming to the PC. With over 100 million RTX PCs in the installed base and over 500 AI-enabled PC applications and games, we are on our way. Moving to Pro Visualization. Revenue of $463 million was up 11% sequentially and up 105% year on year. Fiscal year revenue of $1.55 billion was up 1%. Sequential growth in the quarter was driven by a rich mix of RTX Ada architecture GPUs continuing to ramp. Enterprises are refreshing their workstations to support generative AI-related workloads such as data preparation, LLM fine-tuning, and retrieval augmented generation. These key industrial verticals driving demand include manufacturing, automotive, and robotics. The automotive industry has also been an early adopter of NVIDIA Omniverse as it seeks to digitalize workflows from design to build, simulate, operate, and experience their factories and cars. At CES, we announced that creative partners and developers, including Brickland, WPP, and ZeroLight, are building Omniverse-powered car configurators. Leading automakers like Lotus are adopting the technology to bring new levels of personalization, realism, and interactivity to the car buying experience. Moving to automotive. Revenue was $281 million, up 8% sequentially and down 4% year on year. Fiscal year revenue of $1.09 billion was up 21%, crossing the $1 billion mark for the first time on continued adoption of the NVIDIA Drive platform by automakers. NVIDIA Drive Orin is the AI car computer of choice for software-defined AV fleets. Its successor, NVIDIA Drive Thor, designed for vision transformers, offers more AI performance and integrates a wide range of intelligent capabilities into a single AI compute platform, including autonomous driving and parking, driver and passenger monitoring, and AI cockpit functionality, and will be available next year. There were several automotive customer announcements this quarter. Li Auto, Great Wall Motor, Zeekr, the premium EV subsidiary of Geely, and Xiaomi EV all announced new vehicles built on NVIDIA. Moving to the rest of the P&L. GAAP gross margins expanded sequentially to 76% and non-GAAP gross margins to 76.7% on strong data center growth and mix. Our gross margins in Q4 benefited from favorable component costs. Sequentially, GAAP operating expenses were up 6% and non-GAAP operating expenses were up 9%, primarily reflecting higher compute and infrastructure investments and employee growth. In Q4, we returned $2.8 billion to shareholders in the form of share repurchases and cash dividends. During fiscal year 24, we utilized cash of $9.9 billion towards shareholder returns, including $9.5 billion in share repurchases. Let me turn to the outlook for the first quarter. Total revenue is expected to be $24 billion, plus or minus 2%. We expect sequential growth in data center and ProViz, partially offset by seasonal decline in gaming. GAAP and non-GAAP gross margins are expected to be 76.3% and 77%, respectively, plus or minus 50 basis points. Similar to Q4, Q1 gross margins are benefiting from favorable component costs. Beyond Q1, for the remainder of the year, we expect gross margins to return to the mid-70% range. GAAP and non-GAAP operating expenses are expected to be approximately $3.5 billion and $2.5 billion, respectively. Fiscal year 2025 GAAP and non-GAAP operating expenses are expected to grow in the mid-30% range as we continue to invest in the large opportunities ahead of us. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $250 million, excluding gains and losses from non-affiliated investments. GAAP and non-GAAP tax rates are expected to be 17%, plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website. In closing, let me highlight some upcoming events for the financial community. We will attend the Morgan Stanley Technology and Media and Telecom Conference in San Francisco on March 4th, and the TD Cowen's 44th Annual Healthcare Conference in Boston on March 5th. And of course, please join us for our annual GTC conference starting Monday, March 18th in San Jose, California. To be held in person for the first time in 5 years, GTC will kick off with Jensen's keynote, and we will host a Q&A session for financial analysts the next day, March 19th. We are now open the call for questions. Operator, would you please poll for questions?
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to 1 question. Your first question comes from the line of Toshiya Hari from Goldman Sachs. Your line is open.
Hi, thank you so much for taking the question and congratulations on the really strong results. My question is for Jensen on the data center business. Clearly, you're doing extremely well in the business. I'm curious how your expectations for calendar 24 and 25 have evolved over the past 90 days. And as you answer the question, I was hoping you can touch on, some of the newer buckets within data center, things like software, sovereign AI. I think you've been pretty vocal about how to think about that medium to long term. And recently there was an article about, NVIDIA potentially participating in the ASIC market. Is there any credence to that? And if so, how should we think about you guys playing in that market over the next several years? Thank you.
Thanks, Toshiya. Let's see. There were 3 questions. One more time. First question was, can you?
Sovereign AI.
Well,
I guess your expectations for data center, how they've evolved. Thank you.
Okay. Yeah. Well, we guide 1 quarter at a time, but fundamentally the conditions are excellent for continued growth, calendar 24 to calendar 25 and beyond. And let me tell you why. We're at the beginning of 2 industry-wide transitions, and both of them are industry-wide. The first one is a transition from general to accelerated computing. General purpose computing, as you know, is starting to run out of steam, and you could tell by the CSPs extending, and many data centers, including our own for general purpose computing, extending the depreciation from 4 to 6 years. There's just no reason to update with more CPUs when you can't fundamentally and dramatically enhance its throughput like you used to. And so you have to accelerate everything. This is what NVIDIA has been pioneering for some time. And with accelerated computing, you can dramatically improve your energy efficiency. You can dramatically improve your cost in data processing by 20 to 1. Huge numbers. And of course, the speed. That speed is so incredible that we enabled a second industry-wide transition called generative AI. Generative AI, I'm sure we're going to talk plenty about it during the call. But remember, generative AI is a new application. It is enabling a new way of doing software, new types of software being created. It is a new way of computing. You can't do generative AI on traditional general purpose computing. You have to accelerate it. And the third is it is enabling a whole new industry. And this is something worthwhile to take a step back and look at, and it connects to your last question about sovereign AI. A whole new industry in the sense that for the very first time, a data center is not just about computing data and storing data and serving the employees of a company. We now have a new type of data center that is about AI generation, an AI generation factory. And you've heard me describe it as AI factories. But basically, it takes raw material, which is data, it transforms it with these AI supercomputers that NVIDIA builds, and it turns them into incredibly valuable tokens. These tokens are what people experience on the amazing ChatGPT or Midjourney or search these days are augmented by that. All of your recommender systems are now augmented by that. The hyper personalization that goes along with it. All of these incredible startups in digital biology, generating proteins and generating chemicals, and the list goes on. And so all of these tokens are generated in a very specialized type of data center. And this data center we call AI supercomputers and AI generation factories. We're seeing diversity. One of the other reasons, so at the foundation is that the way it manifests into new markets is in all of the diversity that you're seeing us in. One, the amount of inference that we do is just off the charts now. Almost every single time you interact with ChatGPT, you know that we're inferencing. Every time you use Midjourney, we're inferencing. Every time you see amazing these Sora videos that are being generated, or Runway, the videos that they're editing, Firefly, NVIDIA is doing inferencing. The inference part of our business has grown tremendously. We estimate about 40%. The amount of training is continuing because these models are getting larger and larger. The amount of inference is increasing. But we're also diversifying into new industries. The large CSPs are still continuing to build out. You could see from their CapEx and their discussions. But there's a whole new category called GPU specialized CSPs. They specialize in NVIDIA AI infrastructure, GPU specialized CSPs. You're seeing enterprise software platforms deploying AI. ServiceNow is just a really, really great example. You see Adobe, you see others, SAP and others. You see consumer internet services that are now augmenting all of their services of the past with generative AI, so they can have even more hyper-personalized content to be created. You see us talking about industrial generative AI. Now our industries represent multi-billion-dollar businesses. Auto, health, financial services, in total, our vertical industries are multi-billion-dollar businesses now. And of course, sovereign AI. The reason for sovereign AI has to do with the fact that the language, the knowledge, the history, the culture of each region are different. And they own their own data. They would like to use their data, train it to create their own digital intelligence and provision it to harness that raw material themselves. It belongs to them. Each one of the regions around the world, the data belongs to them. The data is most useful to their society. And so they want to protect the data. They want to transform it themselves, value-added transformation into AI, and provision those services themselves. So we're seeing sovereign AI infrastructures being built in Japan, in Canada, in France, so many other regions. And so my expectation is that what is being experienced here in the United States, in the West, will surely be replicated around the world. And these AI generation factories are going to be in every industry, every company, every region. And so I think this last year we've seen generative AI really becoming a whole new application space, a whole new way of doing computing, a whole new industries being formed, and that's driving our growth.
Your next question comes from a line of Joe Moore from Morgan Stanley. Your line is open.
Great, thank you. I wanted to follow up on the 40% of revenues coming from inference. That's a bigger number than I expected. Can you give us some sense of, where that number was, maybe the year before, how much you're seeing growth around LLMs from inference, and how are you measuring that? Is that, I assume it's in some cases the same GPUs are used for training and inference. How solid is that measurement? Thank you.
I'll go backwards. The estimate is probably understated, but we estimated it, and let me tell you why. Whenever a year ago, the recommender systems that people are, when you run the internet, the news, the videos, the music, the products that are being recommended to you, because as you know, the internet has trillions, I don't know how many trillions, but trillions of things out there, and your phone is, 3 inches squared, and so the ability for them to fit all of that information down to something such a small real estate is through a system, an amazing system called recommender systems. These recommender systems used to be all based on CPU approaches, but the recent migration to deep learning and now generative AI has really put these recommender systems now directly into the path of GPU acceleration. It needs GPU acceleration for the embeddings. It needs GPU acceleration for the nearest neighbor search. It needs GPU acceleration for the re-ranking, and it needs GPU acceleration to generate the augmented information for you. So GPUs are in every single step of a recommender system now. And as you know, recommender system is the single largest software engine on the planet. Almost every major company in the world has to run these large recommender systems. Whenever you use ChatGPT as being inference, whenever you hear about Midjourney and the number of things that they're generating for consumers, when you see Getty, the work that we do with Getty and Firefly from Adobe, these are all generative models. The list goes on, and none of these, as I mentioned, existed a year ago. 100% new.
Your next question comes from a line of Stacy Rasgon from Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. Colette, I wanted to touch on your comment that you expected the next generation of products, I assume that meant Blackwell, to be supply constrained. Can you dig into that a little bit? What is the driver of that? Why does that get constrained as Hopper is easing up? And how long do you expect that to be constrained? Like, do you expect the next generation to be constrained like all the way through calendar 25? Like, when do those start to ease?
Yeah, the first thing is overall our supply is improving. Overall, our supply chain is just doing an incredible job for us. Everything from, of course, the wafers, the packaging, the memories, all of the power regulators, to transceivers and networking and cables and you name it. The list of components that we ship, as you know, people think that NVIDIA GPUs is like a chip, but the NVIDIA Hopper GPU has 35,000 parts. It weighs 70 pounds. These things are really complicated things. We built, people call it an AI supercomputer for good reason. If you ever look in the back of the data center, the systems, the cabling system is mind-boggling. It is the most dense, complex cabling system for networking the world's ever seen. Our InfiniBand business grew 5x year over year. The supply chain is really doing fantastic supporting us. And so overall, the supply is improving. We expect the demand will continue to be stronger than our supply provides, and through the year. And we'll do our best. The cycle times are improving, and we're going to continue to do our best. However, whenever we have new products, as you know, it ramps from 0 to a very large number, and you can't do that overnight. You know, everything is ramped up. It doesn't step up. And so whenever we have a new generation of products, and right now we are ramping H200s, there's no way we can reasonably keep up on demand in a short term as we ramp. We're ramping Spectrum X. We're doing incredibly well with Spectrum X. It's our brand new product into the world of Ethernet. InfiniBand is the standard for AI dedicated systems. Ethernet with Spectrum X, Ethernet is just not a very good scale-out system. But with Spectrum X, we've augmented, layered on top of Ethernet, fundamental new capabilities like adaptive routing, congestion control, noise isolation or traffic isolation, so that we can optimize Ethernet for AI. And so InfiniBand will be our AI dedicated infrastructure. Spectrum X will be our AI optimized networking, and that is ramping. And so we'll you know, with all of new products, demand is greater than supply, and that's just kind of the nature of new products. And we work as fast as we can to catch up with the demand. But overall, net, our supply is increasing very nicely.
Your next question comes from the line of Matt Ramsey from TD Cowen. Your line is open.
Good afternoon, Jensen and Colette. Congrats on the results. I wanted to ask, I guess, a two-part question, and it comes at what Stacy was just getting at on your demand being significantly more than your supply, even though supply is improving. And I guess the the two sides of the question are, I guess, first for Colette, like, how are you guys thinking about allocation of product in terms of customer readiness to deploy and sort of monitoring if there's any kind of buildup of product that might not yet be turned on? And then I guess, Jensen, for you, I'd be really interested to hear you speak a bit about a thought that you and your company are putting into the allocation of your product across customers, many of which compete with each other, across industries to smaller startup companies, to things in the healthcare arena, to government. It's a very, very unique technology that you're enabling, and I'd be really interested to hear you speak a bit about how you think about, quote unquote, fairly allocating sort of for the good of your company, but also for the good of the industry. Thanks.
Let me first start with your question, thanks, about how we are working with our customers as they look into how they are building out their GPU instances and our allocation process. The folks that we work with, our customers that we work with, have been partners with us for many years as we have been assisting them both in what they set up in the cloud as well as what they are setting up internally. Many of these providers have multiple products going at one time to serve so many different needs across their end customers, but also what they need internally. So they are working in advance, of course, thinking about those new clusters that they will need. And our discussions with them continue, not only on our Hopper architecture, but helping them understand the next wave and getting their interest and getting their outlook for the demand that they want. So it's always a moving process in terms of what they will purchase, what is still being built, and what is in use for end customers. But the relationships that we've built and their understanding of the sophistication of the build has really helped us with that allocation and both helped us with our communications with them.
First, our CSPs have a very clear view of our product roadmap and transitions. And that transparency with our CSPs gives them the confidence of which products to place and where and when. And so they know the timing to the best of our ability, and they know quantities, and of course allocation. We allocate fairly. Do the best we can to allocate fairly, and to avoid allocating unnecessarily. As you mentioned earlier, why allocate something when a data center is not ready? Nothing is more difficult than to have anything sit around. And so allocate fairly and to avoid allocating unnecessarily. And the question that you asked about the end markets, you know that we have an excellent ecosystem with OEMs, ODMs, CSPs, and very importantly, end markets. What NVIDIA is really unique about is that we bring our customers, we bring our partners, CSPs and OEMs, we bring them customers. The biology companies, the healthcare companies, financial services companies, AI developers, large language model developers, autonomous vehicle companies, robotics companies. There's just a giant suite of robotics companies that are emerging. They're warehouse robotics to surgical robotics to humanoid robotics, all kinds of really interesting robotics companies, agricultural robotics companies. All of these startups, large companies, healthcare, financial services, and auto and such, are working on NVIDIA's platform. We support them directly. And oftentimes, we can have a twofer by allocating to a CSP and bringing the customer to the CSP at the same time. And so this ecosystem, you're absolutely right that it's vibrant, but at the core of it, we want to allocate fairly, with avoiding waste and looking for opportunities to connect partners and end users. We're looking for those opportunities all the time.
Your next question comes from a line of Timothy Arcuri from UBS. Your line is open.
Thanks a lot. I wanted to ask about how you're converting backlog into revenue. Obviously, lead times for your products have come down quite a bit. Colette, you didn't talk about the inventory purchase commitments, but if I sort of add up your inventory plus the purchase commits and your prepaid supply, sort of the aggregate of your supply, it was actually down a touch. How should we read that? Is that just you saying that you don't need to make as much of a financial commitment to your suppliers because the lead times are lower, or is that maybe you're reaching some sort of steady state where you're closer to filling your order book and your backlog? Thanks.
Yeah, so let me highlight on those three different areas of how we look at our suppliers. You're correct, our inventory on hand, given our allocation that we're on, we're trying to, as things come into inventory, immediately work to ship them to our customers. I think our customer appreciates our ability to meet the schedules that we've looked for. The second piece of it is our purchase commitments. Our purchase commitments have many different components into it. Components that we need for manufacturing, but also often we are procuring capacity that we may need. The lengths of that need for capacity or the length for the components are all different. Some of them may be for the next 2 quarters, some of them may be for multiple years. I can say the same regarding our prepaids. Our prepaids are pre-designed to make sure that we have the reserved capacity that we need at several of our manufacturing suppliers as we work forward. So wouldn't read into anything regarding approximately about the same numbers as we are increasing our supply. All of them just have different lengths as we have sometimes had to buy things in long lead times or things that needed capacity to be built for us.
Your next question comes from a line of Ben Reitz from Melius Research. Your line is open.
Yeah, thanks. Congratulations on the results. Colette, I wanted to talk about your comment regarding gross margins and that they should go back to the mid-70s. If you don't mind unpacking that. And also, is that due to the HBM content in the new products? And what do you think are the drivers of that comment? Thanks so much.
Yeah, thanks for the question. We highlighted in our opening remarks really about our Q4 results and our outlook for Q1. Both of those quarters are unique. Those 2 quarters are unique in their gross margin as they include some benefits from favorable component costs in the supply chain, kind of across both our compute and networking, and also in several different stages of our manufacturing process. So looking forward, we have visibility into a mid-70s gross margin for the rest of the fiscal year, taking us back to where we were before this Q4 and Q1 peak that we've had here. So we're really looking at just a balance of our mix. Mix is always going to be our largest driver of what we will be shipping for the rest of the year, and those are really just the drivers.
Your next question comes from a line of CJ Muse from Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. Bigger picture question for you, Jensen. When you think about the million-X improvement in GPU compute over the last decade and expectations for similar improvements in the next, how do your customers think about the long-term usability of their NVIDIA investments that they're making today? Do today's training clusters become tomorrow's inference clusters? How do you see this playing out? Thank you.
Hey, CJ, thanks for the question. Yeah, that's the really cool part. If you look at the reason why we're able to improve performance so much, it's because we have 2 characteristics about our platform. One is that it's accelerated, and 2, it's programmable. It's not brittle. NVIDIA is the only architecture that has gone from the very, very beginning, literally the very beginning when CNNs and Alex Kershevsky and Ilya Sutskever and Jeff Hinton first revealed AlexNet, all the way through RNNs to LSTMs to every RLs to deep learning RLs to transformers to every single version and every species that have come along, vision transformers, multimodality transformers, that every single, and then now time sequence stuff every single variation, every single species of AI that has come along, we've been able to support it, optimize our stack for it, and deploy it into our installed base. This is really the great, amazing part. On the one hand, we can invent new architectures and new technologies like our tensor cores, like our transformer engine for tensor cores, improve new numerical formats and structures of processing, like we've done with the different generations of tensor cores, meanwhile, supporting the installed base at the same time. And so, as a result, we take all of our new software algorithm inventions, all of the new inventions of models of the industry, and it runs on our installed base on the one hand. On the other hand, whenever we see something revolutionary, we can, like transformers, we can create something brand new, like the Hopper transformer engine, and implement it into future. And so we simultaneously have this ability to bring software to the installed base and keep making it better and better and better. So our customers' installed base is enriched over time with our new software. On the other hand, for new technologies, create revolutionary capabilities. Don't be surprised if in our future generation, all of a sudden, amazing breakthroughs in large language models were made possible. And that those breakthroughs, some of which will be in software because they run CUDA, will be made available to the installed base. And so we carry everybody with us on the one hand, we make giant breakthroughs on the other hand.
Your next question comes from a line of Aaron Rakers from Wells Fargo. Your line is open.
Yeah, thanks for taking the question. I wanted to ask about the China business. I know that in the prepared comments, you said that you started shipping some alternative solutions into China. You also pointed out that you expect that contribution to continue to be about a mid-single digit percent of your total data center business. So I guess the question is what is the extent of products that you're shipping today into the China market? And why should we not expect that, maybe other alternative solutions come to the market and expand your breadth to participate in that opportunity again? Thank you.
At the core, remember, the U.S. government wants to limit the latest capabilities of NVIDIA's accelerated computing and AI to the Chinese market. And the U.S. government would like to see us be as successful in China as possible. Within those two constraints, within those two pillars, if you will, are the restrictions. And so we had to pause when the new restrictions came out. We immediately paused so that we understood what the restrictions are, reconfigured our products in a way that is not software hackable in any way. And that took some time. And so we reset our product offering to China, and now we're sampling to customers in China. And we're going to do our best to compete in that marketplace and succeed in that marketplace within the specifications of the restriction. And so that's it. This last quarter, our business significantly declined as we paused in the marketplace. We stopped shipping in the marketplace. We expect this quarter to be about the same. But after that, hopefully we can go compete for our business and do our best, and we'll see how it turns out.
Your next question comes from a line of Harsh Kumar from Piper Sandler. Your line is open.
Yeah, hey, Jensen, Colette, and NVIDIA team. First of all, congratulations on a stunning quarter and guide. I wanted to talk about a little bit about your software business, and it's pleasing to hear that it's over $1 billion But I was hoping, Jensen or Colette, if you could just help us understand what the different parts and pieces are for the software business. In other words, just help us unpack it a little bit so we can get a better understanding of where that growth is coming from.
Let me take a step back and explain the fundamental reason why NVIDIA will be very successful in software. So first, as you know, accelerated computing really grew in the cloud. In the cloud service providers have really large engineering teams, and we work with them in a way that allows them to operate and manage their own business. And whenever there are any issues, we have large teams assigned to them, and their engineering teams are working directly with our engineering teams, and we enhance, we fix, we maintain, we patch the complicated stack of software that's involved in accelerated computing. As you know, accelerated computing is very different than general purpose computing. You're not starting from a program like C++, you compile it and things run on all your CPUs. The stacks of software necessary for every domain, from data processing, SQL versus SQL structured data versus all the images and text and PDF, which is unstructured, to classical machine learning, to computer vision, to speech, to large language models, all of recommender systems. All of these things require different software stacks. That's the reason why NVIDIA has hundreds of libraries. If you don't have software, you can't open new markets. If you don't have software, you can't open and enable new applications. Software is fundamentally necessary for accelerated computing. This is the fundamental difference between accelerated computing and general purpose computing that most people took a long time to understand. And now people understand that the software is really key. In the way that we work with CSPs, that's really easy. We have large teams that are working with their large teams. However, now that generative AI is enabling every enterprise and every enterprise software company to embrace accelerated computing. And when it is now essential to embrace accelerated computing because it is no longer possible, no longer likely anyhow, to sustain improved throughput through just general purpose computing. All of these enterprise software companies and enterprise companies don't have large engineering teams to be able to maintain and optimize their software stack to run across all of the world's clouds and private clouds and on-prem. So we are going to do the management, the optimization, the patching, the tuning, the install base optimization for all of their software stacks. And we containerize them into our stack. We call it NVIDIA AI Enterprise. And the way we go to market with it is think of that NVIDIA AI Enterprise now as a runtime, like an operating system. It's an operating system for artificial intelligence. And we charge $4,500 per GPU per year. And my guess is that every enterprise in the world, every software enterprise company that are deploying software in all the clouds and private clouds and on-prem will run on NVIDIA AI Enterprise, especially, obviously for our GPUs. And so this is going to likely be a very significant business over time. We're off to a great start, and Colette mentioned that it's already at $1 billion run rate, and we're really just getting started.
Thank you. I will now turn the call back over to Jensen Huang, CEO, for closing remarks.
The computer industry is making two simultaneous platform shifts at the same time. The $1 trillion install base of data centers is transitioning from general purpose to accelerated computing. Every data center will be accelerated so the world can keep up with the computing demand with increasing throughput while managing cost and energy. The incredible speed up of NVIDIA enabled a whole new computing paradigm, generative AI, where software can learn, understand, and generate any information, from human language to the structure of biology and the 3D world. We are now at the beginning of a new industry where AI-dedicated data centers process massive raw data to refine it into digital intelligence. Like AC power generation plants of the last industrial revolution, NVIDIA AI supercomputers are essentially AI generation factories of this industrial revolution. Every company in every industry is fundamentally built on their proprietary business intelligence, and in the future, their proprietary generative AI. Generative AI has kicked off a whole new investment cycle to build the next $1 trillion of infrastructure of AI generation factories. We believe these two trends will drive a doubling of the world's data center infrastructure installed base in the next 5 years and will represent an annual market opportunity in the hundreds of billions. This new AI infrastructure will open up a whole new world of applications not possible today. We started the AI journey with the hyperscale cloud providers and consumer internet companies. And now every industry is on board, from automotive to healthcare, to financial services, to industrial, to telecom, media and entertainment. NVIDIA's full stack computing platform with industry-specific applications frameworks and a huge developer and partner ecosystem gives us the speed, scale, and reach to help companies in every industry become an AI company. We have so much to share with you at next month's GTC in San Jose, so be sure to join us. We look forward to updating you on our progress next quarter.
This concludes today's conference call. You may now
All right, there you go. We're going to do a 10-minute recap of everything that I heard in this call. This was just absolutely incredible. And then we're going to keep going from there. Hope you guys have been having fun because this has been one hell of an earnings season. And the season's pretty much over. I know we have like a couple more companies that have to report, but NVIDIA was the top dog to end off the season. And they ended it off in a pretty damn good way in terms of the numbers that they put up. So let's get into it. Thank you everybody for being here. 1,400 people. We're going to talk for 10 minutes, break down these entire earnings. I'll answer any questions, and then we will go from there. We'll have a lot to talk about tomorrow on the market open as we continue to break down these results and see how the broader market interprets everything. So let's look at the stock right now. Stock has been teetering from 7 to 10%, but right now we've got it at about 7.62. $726, 674 was apparently, if it holds up, the dip today. And if you bought it at 674 or around 677, 685, you are up about 5 to 7% on your capital after hours. SMCI up another 7%. They just did a $1.5 billion convertible note offering after hours, which is not really this share dilution. It's more so like it's more of a different way to finance their operations. So they're up 7%. That news didn't really affect them. And then you got Palantir. That's it cracked 24 at one point. Right now, 23.72 was down at 22.74 today, down 3%. Now up 4.22% on the day because of what NVIDIA said. On top of that, we've got AMD as well. That is up 2.97%. So why is the market so excited? Why did the market give NVIDIA a 7% premium when the stock's already up 40% year to date? Now the stock is up about 47% year to date. First of all, before I get into this, tomorrow NVIDIA is going to get price targets that are going to be, in my opinion, out of this world. We're going to look at some of their numbers in a second, but the street can't ignore this anymore. Now, the street might have some concerns about if this is sustainable, but given what we're about to talk about in terms of what Jensen Huang's long-term vision is for AI, it seems like not only is this sustainable, it seems, as someone said in the chat, this is just the beginning of their S-curve. And that if this truly is an opportunity that's bigger than the internet, which again, it sounds insane to say, but if that's the case, then yeah, why would they be slowing down? Why would this be something that would not continue to grow at these monumental levels? So first, let's just get into high-level thoughts about what Jensen Huang said, and then we'll look at their numbers. Number one, he says demand is outpacing supply. And he pointed to a variety of different industries in which this is happening. Automotive, robotics, pharmaceuticals. media and entertainment. When you really wrap your head about what is NVIDIA, it's kind of like an ETF of a variety of different industries, all of them that in order to maintain competitive and in order to really deal with the levels of competition that are existing in the status quo, you need to have a generative AI solution. Now, this is exactly what CARP says all the time. Healthcare as well, that's correct. CARP says if you want to be competitive in the next 10 to 20 years, you need to have an enterprise AI platform that is actually able to manage all of your data at scale. And that's what Palantir does in the context of the government and the commercial sector. What Jensen is saying is not just about like enterprise AI platforms to be able to, utilize large language models. He's talking about an entirely different operation in terms of how these companies are going to get to the next level, not only of growth, but of evolution. So for example, a company that's trying to use generative AI to do drug discovery, there is a use case for Palantir on the software side, but on the hardware side and the software side for NVIDIA, you need GPUs. You need the ability to be able to plug in those chips to be able to run the models that are ultimately going to determine if you can do the drug discovery and the pattern recognition between all that data to make sure that drug discovery is effective. And if you, for example, Novartis, Pfizer, you're not literally doing it, you're doing it via a hyperscaler, an Amazon, a Google, a Microsoft, potentially a Meta. Meta's thinking about, hey, we have an open source 70 billion parameter LLM. What if we take our, hats in the ring and become hyperscalers as well? So if that's the case, either you're buying from NVIDIA or you're buying from someone that buys NVIDIA. And this is the only time we've seen, really in the past 20 years, one company have such a stranglehold on a new emerging market, and that emerging market be intertwined inextricably with every single part of our lives. And if it's not, it's going to be. And that company has all the pricing power because they're basically a monopoly on these chips and their ability to protect their intellectual property on these chips and their ability to eventually sell these chips. This is NVIDIA. And it's not like we didn't know this before, right? We all knew this. It's just the stock has run up so much, up almost 300%, or sort of 250% over the past year, that people have felt, okay, yeah, we get it. It's amazing. But at what point does the valuation become a little bit crazy? And at what point do we just, not buy just to be with the crowd? Well, this is where we get into the numbers. The numbers they put up today makes you think that maybe the valuation is not as crazy. So we just talked about high level demand, about what Jensen Huang is saying. Now here are the numbers. Top line numbers: record quarterly revenue of 22 billion, up 22% quarter over quarter, 265 year over year. Data center revenue 18.4 billion, that's up 409% year over year, 27% quarter over quarter, and then full year revenue 60 billion, that's up 126%. This right here is, I think, the only thing you need to look at to really see what has happened. Everything is up triple digits: net income, data center revenue, their diluted earnings per share, which ultimately means profits, right? Revenue, all of that is up. The only thing that's up barely 3% is operating expenses. This is a technology company that is scaling. These are numbers that are unreal. So we just talked about like sort of the pie in the sky philosophy of what generative AI is going to mean in a variety of different industries. What does that mean from a empirical perspective? This is what it means. It means a company that last year could spend 11.132 billion on expenses to manage the business. Now they're only spending 11.329 billion, slight increase, but they took revenue from 26 billion to 60 billion. They took they took diluted earnings per share from $1.74 to $11.93. They took net income from 4.3 billion to 29.7 billion. That's profit. Like, these numbers are just insanity. And then you look at the actual multiple, they are growing double their price to earnings. So for anyone who thinks the price to earnings is insane, they are growing double the rate of their price to earnings. That would argue that their price to earnings are going to start to come down because the growth is getting up there. And that if the price to earnings gets to 45-ish tomorrow, 50-ish tomorrow, is that insane? Probably not. It's probably not that insane. If it goes back down to 650 somehow over the next couple of weeks as we have a macro pullback, if that happens, then it's really not insane. And so as a result of that, there was no split announced today. As a result of that, it just seems like this story is not stopping. And if the story is not stopping, then the story is only going to be moving forward. AMD right now up 3%, SMCI 6.5, Palantir 4.2, and Nvidia is up 7.29%, $724. There were 16,000 call options open for a $1,300 strike by the end of this week. This is expiring on 2/23 on Friday. I don't know if we get to $1,300, but I do know that tomorrow the street is going to upgrade the crap out of this company. There is no way the street's going to have, I would think, lower than an 850 price target. All of these guys pretty much already upgraded. Bank of America a month ago upgraded them to 700, and now, they're well above 700. We'll see if this can maintain itself. But if the street upgrades, it's going to be the same story with Palantir. Palantir went from 16 to 25 over the first 2 weeks post earnings, because the lowest, reasonable estimate on the street was, okay, well, $22, $18, which is still, a pretty hefty upgrade. So all those price targets came for Palantir, and now Palantir, it's hard for them to see below 20. Maybe that happens on a macro pullback, but if that doesn't happen, then we're not going to see that again. Nvidia is the question, that we're beyond the 600s at this point, based on all the activity that's going to happen tomorrow and all the upgrades that potentially may be happening. DFLODO, watching on Twitter. Thank you for watching up here. And he says, and they did this all in the peak Fed rate environment. That is such a good point, because we had 5.5% interest rates. This, I think that point right there, that comment shows how special their software is. 5.5% interest rates. Palantir literally pivoted from growth to profitability. And one of their arguments was like, interest rates are high. I mean, they never said this, but we kind of already knew. If interest rates are high, it's going to be hard to sell software. If it's hard to sell software or procure software, we should focus on profitability versus growth, because we're not going to be able to grow at 30% CAGR year over year. And as interest rates come down, the cost of capital becomes cheaper. More companies can buy software. Nvidia can't stop growing, even if interest rates are 5.5%, because every company in the world needs their products. And if every company in the world, you know what I mean, hyperbolically, every company in the world needs their products, it doesn't matter what interest rates are. You need NVIDIA chips, and you're going to pay whatever the hell NVIDIA tells you to pay. And so as a result of that, this is why I think the market is so excited about what's happening with NVIDIA. Lee Allison says NVIDIA will likely triple again this year. Price target 2,000 by the end of the year if there is no split. Well, here's the thing. And so this is what I just tweeted. We'll end off on this. And this, I would love to know what everyone thinks here in the chat. By the way, I tweeted that I bought the leather jacket. I tweeted that I got the leather jacket. It's coming. I got to have the leather jacket, dude. I wish it was here before the earnings. It would have looked so nice wearing it, but it'll be here tomorrow. So on Friday, the market open, I'll be wearing it. This right here is my question. If these numbers are actually insane and the market is at an all-time high, okay, with S&P 503, QQQ 439, does the market take a breather, which means NVIDIA must take a breather? NVIDIA cannot be separate from the broader market. It's just too interlinked in all the buy-side pressure that we have on the major indices. Does NVIDIA take a break if the market wants to take a break? Inflation isn't fully gone yet. We only had 3.1% CPI. The market wanted 2.9. Shelter is ridiculous right now in terms of its inflation. I don't know if we get a 2 handle in February. Maybe we do, but even if we do, is that enough? How could you ignore something growing double its PE? Well, the way you ignore it is that the market's at an all-time high. So to me, the next few months are going to be some of the most interesting times in the market, as investors have to do with sticky inflation. It is sticky, and we're not going to get a cut until the summer. That's my opinion. May, we might get a cut, but based on what the Fed said today in their minutes, probably not May, unless inflation really comes down over the next couple months. And high rates, but also the opportunity of a lifetime being in AI. How does the market reconcile this? How do you reconcile the opportunity of a lifetime, which is generative AI, accelerated computing, and a company that's putting up the numbers to quite literally justify these results? And they're showing no signs of slowing down. They're guiding for $24 billion of revenue next quarter, which is $2 billion above what the analysts expected. How do you ignore that? Well, one of the ways you ignore it is inflation. But is inflation really a reason to ignore this? I mean, that's the question I think the market has to grapple with. We are up 15%, the broader market, since November, December. It's kind of scary. The reason I raised cash today is because I'm scared. I don't want to be holding massive amounts of positions in the equity markets when when we've rallied so far since November that it's almost insane when you look at something like SMCI that's up 8x. Or a company like Lunar that goes up 360%. We're seeing a lot of meme stock, like things are just getting kind of crazy. It's okay to take some profits. Is the market going to say it's okay to finally take some profits, or is the market going to keep this going? Is the market going to keep this going? And so that's what I think we have to see in terms of over the next couple months, what the market is going to decide. Derek says, let's effing go. This is just the beginning. And so that's the other perspective. Is this also just the beginning of AI? Right. So here we go. We got NVIDIA right now at 725, up 7.5%. Tomorrow, for NVIDIA to sell off, the market would have to come to some type of reasonable or unreasonable conclusion that the growth that they showed is not going to keep going, that inflation is going to be a hard macro thing to deal with, and that even though they're growing net income 700% year over year, it's not sustainable. I personally don't think the market's going to come to any of those conclusions, which is why I think this is not going to turn into a dip. I think the market's actually going to buy the stock. The problem is if we get bad inflation data over the next couple of weeks, we got February CPI coming in about 3 weeks in March. Maybe that's what does the taking down. Like I really don't know what is going to be the thing that stops this market, because so far CPI, PPI haven't done it. The only reason we fell 3-4% over the past couple of days is because of the fears of Nvidia. But as you can see, Palantir's up 4%. It basically got back everything it lost because Nvidia went up. And the correlation between Nvidia and Palantir is there, even if it's not exactly direct. Robinhood, that fell almost 5% today, they're up after hours 1.18%. Why? Because if people start trading, the market starts doing well. Robinhood does well as well. And so you got Bitcoin, 51.6. It was at 50,009. It's up 700 points, 51,662 after hours. And it seems like it's because the market momentum is there for Nvidia. Now, Rivian's down 15%. I can't do anything about Rivian. But Rivian's down 15%. So if you bought Rivian, I'm sorry, you bought Rivian. Derek says Nvidia will not sell off tomorrow. I don't think Nvidia has any reason to sell off, but we're going to see how the market interprets this. It's going to be a very, very, very exciting story over the next couple of weeks to see how this plays out. Again, the S&P and the investors that are, the fueling the S&P have to make a decision. By the way, there's $6 trillion on the sidelines in money markets. People have to make a decision. Do you want to get 5.5% for a year in money market funds? Or do you want to play with the big boys that are actually putting some bets on companies that are growing 400% year over year in terms of their data center revenue? Do you want to play with those guys? Or do you think those guys have run up too much? I mean, that's the question. Now, on a fundamental basis, again, their PE is going to get cut in half tomorrow. I mean, the PE is going to be relatively cheap. It's going to be cheaper than Apple. It's going to be cheaper than Apple. But what do you do? Right? If you're in the stock market. And I don't have an answer to this. I think tomorrow they're going to get upgraded and I think Nvidia is going to fly. But I think over the next coming months, it's going to be a very interesting spot for the market because do we hit 5,100, which all analysts projected would happen at the end of the year that quickly? 1 month, 5 weeks into the trading year? Or do we take a breather? Yes, Nvidia's growth is phenomenal, and we just slow it down. We pull back about 5% across the entire market, chill there for a couple of months, and then we make the next leg up. Or does Nvidia just keep doing whatever the hell it wants to do, and the market takes a pullback, but Nvidia is on an island by itself? We're going to find out, and I will be covering it every single day on this channel in the market open, the market close. Thank you, everybody, for being here, and we'll see what ends up happening. Abel says only if Jay Powell raises rates. Now, this is actually a concern. A lot of people have started to talk about that. Maybe inflation is so sticky, Jay Powell will raise rates. I don't think that would happen. But then again, in the 1980s, I'm sure Paul Volcker thought he had finished the job and the job was not finished. And if the job was not finished, well, maybe you do have to do stuff. Now, the Fed today said that inflation's sticky, but probably not to the point where they have to raise rates. So I imagine that's not going to happen. But we're going to see. We're going to see over the next couple of months how this ends up playing out and what ends up happening. All right, that is it for me. ARM has done great. ARM after hours is what, up 5%? ARM is up, 5.26%. Now, the valuation on ARM looks insane, but when you look at NVIDIA's numbers, it's like, does it look that insane? Now, obviously, NVIDIA is putting up just insane numbers in terms of the actual growth rate. ARM is not doing that, but this is how the market is thinking about all these companies in one bucket, whether it's fair or not. That's how the market's interpreting it. Right now, NVIDIA is at up 7.25%, and Palantir is up 4.18% on the day. All right, that's it for me. Thank you, everybody, for joining. If you're new to this channel, please consider subscribing. We do a live stream every single morning and a live stream every single afternoon. And I think you guys will enjoy that live stream. It's becoming a fun show, our own version of CNBC. The live stream is growing. A lot of people are coming to the show, and it's becoming pretty exciting. And, we have 3,000 people here today. So thank you from the bottom of my heart. You guys could have been anywhere, but you chose to spend it with me. So thank you for being here. I appreciate it deeply. We're going to see what happens with NVIDIA over the next couple of weeks. My Twitter in the chat. I'll put it right here. If you want to follow along all the updates on Twitter, you can follow there. And I will see you guys tomorrow, 8:45 a.m. live to continue to see what happens in the world of the stock market. Thank you, everybody. Appreciate you all. Love you all. Thank you for being here. Lila, you had a great call from the UK. Thank you for being here. Love all of you. I'll see you guys tomorrow. Have a good one. Good night, everybody.